All right, guys. Thanks for being here with us. We're going to be starting soon in a couple of minutes. Thanks for hanging in there. We'll be right. We'll be starting here in a couple of minutes, guys, with Matt Maley. All right, guys, welcome. Today, we are going to go over a couple things in the market here with Mr. Matt Maley, as seen on CNBC and Bloomberg. He's going to be here with us, and we're going to be starting here now, just getting everything ready. Guys, so great day today in the markets. It seems like, things are going in its own way, and we definitely want to make sure that everybody here is is ready for what we're about to go through. Okay, give me in the chat, let me know if you're ready. I need to see some yeses there. Let me know if you are ready to get started, if you are ready to go. Yes. How many yeses do we have there? Okay, let's roll. Okay, I need to see a couple more, guys. Come on. All right. Okay. All right. People are pumped. People are excited. Okay. Go ahead and let us know where you are in the chat. Let us know where you're tuning in from, what part of the world you're checking us out on today's amazing session that we're going to have with Matt Maley. All right. Canada, Maryland, Charleston, Alaska, Chicago, Costa Rica, India, Massachusetts, Canada, Romania. Keep them coming, guys. Okay, love it, love it. Great. All right, so it seems like we have people here all over the world. That's no surprise. Benzinga is for retail traders, so we do have a lot of audiences throughout the world, spread out. Cali, Florida, Kentucky, New York. That's awesome. That's great, guys. All right, so next thing here, before we get started, I need to hear from you. What are your concerns in the market? What do you think is moving the markets? What do you think is the main theme running the markets today? Today, not 2 weeks ago, today. Let's see some answers there. Okay, options trading. Do you guys think it's supply chain? Do you still think we're going to be in supply chain? Do you still think it's inflation? Give me some real market themes there. Meta, definitely the metaverse for sure. Young, big money. Okay, tech, climate change, uncertainty, infrastructure bill, psychology. Okay, so we got a couple themes there. We got a couple things going on there. And I believe Matt Maley's in the house. Is that correct? Is that Matt? Okay. I think you're muted.
It would help if I didn't have my mute on. Sorry about that.
It's okay, man. How you doing?
Good. How you doing? It's a crazy time in the markets, but that's what makes them fun. When the markets are going up and down like they have been lately, down in September, up since the beginning of October. We'll see what happens going forward, Rodrigo. But it's one of those. It's exciting time for the markets, and I think I've seen a lot of people talk about options in terms of what's moving the markets. I think that's definitely the case, and I think that will be the case through at least the rest of the year and well beyond.
Yeah, absolutely. These are some interesting times in the market, and obviously you want to be on the good side of the trade. Do you want to go ahead and share your screen here before we get started, Matt?
Okay. Okay, does it come up? Oops. Hold on 1 second. Okay.
All right, cool.
Now, can you see it? Can you see it now? My presentation.
Yep. So that is, and what you guys are seeing in the back, that's a Bloomberg terminal. That's pretty much what equity firms use. It's not really available for retail. Great, good stuff there, Matt. So all in all, right now, for those that don't know you, do you mind giving a brief introduction here of your experience in Wall Street? I already know it pretty well, but for those that are joining in here for the first time, just a little background on really, your trajectory in Wall Street throughout all this time.
Absolutely. Just a little bit of why the heck would you listen to what I've got to say? And my background really comes down to having worked. I'm a strategist. Part of my job is on top of writing or some market letters and being involved in this chat room with Benzinga, and I'm the market strategist at Miller Tabak. You may see me on ESPN, on CNBC. I'll be on CNBC, in fact, CNBC Asia after this thing at 8 o'clock tonight, 8 o'clock Eastern time. And I was on earlier today in New York, or out of New York. Here I'm here in the Boston area, but I was here on the East Coast today at 1:30. I'll be again on Friday in their Trading Nation segment. So, but the point is that most of these strategists are former regular analysts or what do you call the economists, and they do a fine job, but they are very much in the realm of what should happen and what theoretically will happen eventually. Where I spent 25 years on two of the biggest trading desks on Wall Street. Solomon Brothers back in the, if you ever read the book The Liar's Poker from back in the 80s and 90s, I spent 15 years at Solomon Brothers. It was taken over eventually by, it's part of Citigroup now, but it was the biggest trading desk on Wall Street and the most important trading desk. And I covered, and then after that, I spent 10 years at Merrill Lynch, again, with their institutional trading desk, talking to some of the biggest institutions in the world, whether it be the biggest mutual funds, hedge funds, banks, insurance companies, etc., and really get to know what does happen. Not I would say what should happen, what really does happen, because we don't care on the trading desk. It's more short-term trading. We don't care where the stock should be 2 years from now. We care about where it's going to be tomorrow because we have a position in the name, and if we lose a lot of money, we're out of a job. And so that's really where my background came from. And then I came here to after 25 years of doing that, I came here to Miller Tabak and still was involved in trading for a while, but more on the strategy side, because I really combined a lot of the different, not just basic fundamental analysis, which is always very, very important, but I really try to combine not just fundamental analysis, but technical analysis, sentiment, and other things that really help, that really decide, better on market timing, when the market's going to make those key moves. It's great when we see a stock move 1% or a group move 1% over a day or two, but when you see those big moves over several days or even a couple of weeks, that's where you really maximize your returns. You get to make key turning points, and especially when you get into the options, that's when you really can, leverage it without having to put very much money down. So I guess my point is that if you're finding only fundamental analysis, you're following the old adage on Wall Street, which actually is a lousy adage, and it says the market is always right, and the market is not always right. The market is only always right eventually, and that's what we want to do. Is when the market is wrong, that's how people make money. That's how big hedge funds, all these, you hear about these guys, Paul Tudor Jones and these guys, that's where they made their money, when the market was wrong. I mean, when in 1987, when Paul Tudor Jones first made his mark, was when right before the crash, he saw the market was ridiculously overpriced, and the market crashed. He made a fortune. And the market was wrong in 1999. The market was wrong at the bottom in 2003. We can go on and on with different groups, but the market really is just a situation where we want to be able to take advantage of these divergences that take place between the fundamentals and where the market's trading, and that's where we can really maximize those returns. So that's really kind of, again, why I'm here, and it's my whole kind of shtick is, help people, see these turning points, invest, and again, with my market letters, we have several different tiers. I have some longer term ones. The tier 1 is a longer term one. Tier 2, it's a more intermediate term one. And then tier 3, which is a call 3 times a week, where we talk about shorter term things. And then the tier 4, which is the chat room, is something that we talk about stocks and groups, ETFs, markets, all day long, and really try to get those the big moves in the marketplace where we can take advantage of it, especially in the options. But when I'm doing that, also, it's not just giving out the specific ideas, but also talking about why did I come up with those ideas? I mean, it's great to say, hey, buy this stock or sell this stock, buy this call option, sell this, buy a put option, whatever it happens to be. But why did you do that? You want to know why you're doing it. And so over time, you'll be making decisions much more on your own. But the chat room is a great place, because not only are you making your decisions on your own, or somebody like me with close to 40 years experience in the business, but you also have other people who are trading day in and day out. Some are day traders, but some are trading a little less active, but they're still quite active, and you can get some good ideas from that. And not only that, as we get some ideas that they think are good ideas, you start bouncing them off each other, and then you realize, oh my gosh, that's not such a great idea. And one of those was just last week, or advanced micro devices, where somebody asked me, geez, this looks like the stock's really extended. We should probably buy some puts in this. And I was like, as much as I don't like advanced micro, it's getting overbought. There's a lot of reasons to avoid getting short the stock or buying any puts. Sure enough, the stock went from $115 to $150, $155. It wasn't until today that this morning we suggested buying some puts in the stock, and the stock did come down. So, so not only just, again, not all of our ones win. I have an idea at Home Depot right now that I think the stock will come down. Hasn't worked. We haven't lost money in it yet. It hasn't really come down yet. But nothing's perfect. But we're talking in a way and using the correct tools in the marketplace rather than just following the fundamentals, because those fundamentals, the market, especially when you have as much liquidity as in the market right now, a lot of funny things can happen that go far beyond the fundamentals. Okay.
All right. So let's touch on that. So you mentioned that you were those trades were from the chat room, you said?
That's right.
Okay. Let's dive a little bit deeper on those trades, if you don't mind. You said it was Home Depot and.
Well, let's just talk about right here, and we can talk about why I think the next couple of months. We'll do that in a minute, but let's go about these specific trades. Why I think, but we'll talk about why I think there could be a lot more volatility in the last 2 months of the year and into early next year, and a lot of it has to do with this options trading, and why. Really nimble traders, I think, are going to do very, very well. But anyway, let's talk about the trades that we did literally just this week. Nvidia. Now, here's a stock. This is a chart I sent out this morning. I don't know if you can read the thing, but I'll just read it to you. It says, Nvidia is a great company with great prospects, but it has gone parabolic recently. 50%. It had already rallied, over 100%, and the stock had rallied another 50% in just 5 weeks. Its RSI chart, see down here, that's the relative strength index. Okay, and so this is where even though it's got a great story, and the stock everybody knew was expensive, but look at that parabolic move. It's straight up. Nothing goes in a straight line. Okay, it's way above its 200. That 200 DMA shows its 200-day moving average, and its RSI. When it gets above 70, it means the stock's getting overbought. Well, it got to almost 90. You see this? This is this morning. It actually opened. This was before it opened. It was at 89.16. That's its relative strength index. Very, very overbought. It got above 90 when the stock opened today. Look, it hadn't been that overbought since way back here. Now, you can't see it because the chart has gone so parabolic, but this was followed by a big decline, okay? So I came out and said, even though this is a great company, even though this is a great stock, this stock is way overbought. It's got to go down. Let's look at the $305 put options and the $300 options. And so, oops, there we go. So here they are. Whoops, sorry. Here are the $305 options. This is only today's chart. This is a one-day chart. I said right here at 10 o'clock, or just after 10, buy these put options. Okay, the stock opened really high. It started coming down. I don't pretend to get the exact top every time or the exact bottom every time. We certainly have trades that lose money from time to time. But here is one where I said, oh my gosh, this thing's really starting to come down. Let's buy it here. Well, sure enough, by mid-afternoon, when somebody asked me, one of the people on the chat said, what do you think here? Should I take some profits? Yes, I'll buy 180% in, 3 hours, 4 hours, okay? This really worked out well. Now, I told other people, I said, hey, sell some of it here. I think the stock can go lower. And again, we'll go back to that chart here. Look how overbought this stock was, okay? It's still incredible. It can come way down to $250 and still be in a great upward trajectory. So people have to get away from, no, wait a minute, the stock's going straight up. It has to go higher. It's the best company in the world. Well, guess what? Amazon is one of the best companies in the world. It changed the world over the last 25 years. And it's had more than 24 corrections of 20 to 60% over the last decade. 24. Okay, and so stocks like Nvidia are going to see the same kind of thing. Same thing with Tesla, and that was the same thing here. Now, this was a call we made the other day, at the end of the week last week. Oh, do I know that? I don't have my Tesla chart up, but I'm going to go switch while we're here. I'm just going to switch. Can you guys see that my Bloomberg right now?
Yes, give us a one in the chat if y'all can see Matt's Bloomberg terminal.
Okay. Let me just pull this down so I can see. Okay. Equity RSI.
Okay, it looks like they can see a couple of yeses and ones are coming
Look
in.
how, see this RSI? Look how ridiculously overbought it got. It was unbelievably overbought. Now, it got a little frustrating here because we made some nice trades in the put options here at the end of last week. But, you know, we actually, I want to be honest now, we put some in here. It worked for a day. Then we went from in the money to out of the money. And then we made a little money, lost a little money, kind of went back and forth because it was kind of churning here at the top. Then finally it went down, made some nice money. And then, but you see, this, I could go back 2013. See how incredibly overbought this was compared to any other time? I mean, even back here, this is a compare, but look what happened to the stock after that. It got back to this here area right here. Okay, this stock, when it gets, look how overbought it was here. It's more overbought here. Look what happened the last time. We knew no matter how bad, good or bad, the long-term prospects for the stock were going to be, we knew the stock was going to go down. So I'm going to go back to my presentation there, and now you can see what happened to the stock just in the last 2 days. You see?
Wow.
400. Well, again, I don't want to try to say, because in the Nvidia one, we definitely had a specific time where I said, here, this is the option you should buy. This is the put option you should buy. This is when you should buy it. And here we were talking about this for a couple of days. So a lot of the guys in the chat bought it at different levels. So I can't say that everybody made almost 500% in 2 days, but they made some nice profits. And even if they bought it up in here, because some people waited till today to buy them, but they still made over 100% on those options. And again, you don't get these kind of situations every day. I wish I could say, oh my gosh, every day we walk in and then we're going to get an option where we can make 400% on our profits. But you can make 100% or 50%, 150% more often than you might think, especially when the markets are as volatile as they are now. So those are just two examples. We can go on some other ones, but we've done a lot of trading the last couple of days. And what I like to do, and I just started doing this at the beginning of the week. Well, I started last week, but and then at the end of the week, my son got married, so I was away for 2 days. But I come in at the beginning of the week, and we talk about what's coming up this week, and I just kind of say the week in advance is kind of what I call it. And I've just cut a couple of different blurbs out, posts out. I say, hey, these stocks are all reporting some earnings this week. Too many people, they look and they say, oh, look at that opportunity I missed. The stock went way up, the stock went way down. But that's guessing. I mean, because you have no idea what they're earning. Unless you have inside information, which you're going to go to jail for, you don't know if a company's going to report really good earnings or really bad earnings. But what you can do is make an educated decision rather than just a wild guess. And we chose a couple of stocks that were about to report earnings. And we said, hey, these ones you can look at because they're way oversold. And they look like they could have, if they report good earnings, these are ones that we can make some money on. Now, we didn't make 400%. But you mind if I go on to these couple of examples here?
Yeah, sure. Just wanted to kind of put everything into context here so everybody's staying on track. So basically, Matt is going over some of the trades inside the chat room that we're trading there all day. It's like our trading room, and these are some of the most recent trades that we've made with options. Right.
Exactly, and just literally in the last week or so. I want to make sure I have the right. There we go. Okay, Amgen. Now, here's the chart. And again, now I like it. Here's a situation where, are they going to report earnings? How do we know for sure? We don't know. I don't have any inside information. But I was very bullish on the fundamental side because I think the healthcare healthcare sector is a great hedge against inflation. And we know that. But look how the stock, this is one of the most important stocks in the sector, but it's been getting clobbered this year. And I'm like, look, it's way oversold. But look, then I move to the technical side of things. I go, it's gotten down just below its 200-day moving average. And look at all the other times. It gets just below it there, just below it there, just below it there. But it never seems to stay below it for very long. Sure enough, so I'm like, hey, they're just about report earnings. It's relative strength index. Remember, we talked about that earlier on those two tech stocks, Tesla and Nvidia. It was very overbought. But here they are. It's getting oversold. Look at the last two times it got oversold. The stock bounced very nicely. I even forgot to mention this one here where it bounced. It got oversold, not as much as it is now. But here was a type of situation where it really felt the odds were quite good that the stock was really washed out. Even if they reported bad earnings, the stock would bounce a little bit. And if they reported good earnings, the stock would bounce strongly. And sure enough, they reported good earnings. And why can't I get this to, there we go.
Can you put it full screen, Matt?
Let's see here. So I thought I did that because I can't hit present. I'm sorry.
Yeah, if you can, it's fine. Don't worry.
I'm having a problem with that. I apologize.
No worry. That's fine.
But we'll do that I'll get this better on, and we can look at them on the regular Bloomberg. But see here, this is when we did it right at the end of the month. We said, hey, this is a stock is down. This is the Amgen. The stock was trading at about $210. We bought the at the money calls. I like to go usually at the money rather than out of the money. The out of the money call options. Puts and calls tend to be a little bit cheaper, or they always are a little bit cheaper because they're out of the money. But you don't have to wait around for if you buy something 10% out of the money, it's got to rally a lot. Or in this case, we got again 153% in just 4 trading days. And of course, the stock I had that was one of my key picks on the tier 1 and tier 2, and the stock has rallied nicely on its own. But that's a situation where the options did very well. Same thing here at FANG. Now, when I talk about FANG, we're talking about Diamondback Energy, not the FANG stocks, Facebook, Apple, Amazon, blah, 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 Google, etc. This is Diamondback Energy. The stock had a really nice rally here, and I'd been bullish on the stock for a long time. It got stuck in this sideways range, but it worked off an overbought condition, which I really liked. It's like, great, the stock is getting it. So if it can just report a decent earnings and make a nice higher high, again, going back to the technical side of things, my fundamental picture is that I've been bullish on the energy stocks for a year now. But a year ago, this time last year, nobody was bullish on the bull stocks. I was, and we made a huge run. But they don't go up in a straight line. So I'd said, okay, let's look at it here. If it can break out, which you can see it did, the options should rally. And sure enough, over a couple of days, see it. Whoops. Go back. There we are. You can see I was here at the end of the month. I said they were reporting on Monday, so that was the first. And sure enough, these options went up, about 80%. And they kind of fluctuate. Again, this was a quick short-term trade. We did it right after the options. A lot of times, right after the earnings. A lot of times when a company reports earnings, you see a big spike move up or down, and then it settles in. So that was a situation where, okay, let's just get out of that trade. We're not going to let it ride, and we'll go from there. Because there's some right now that I want to talk about going through the rest of this week that I would let ride for several days. And the last one is Vulcan Materials. And here's a stock, same thing. We're going in right before this week. All right, you can see how the stock was testing a double top high. That's the technical thing. Vulcan Materials, they're a great infrastructure play. So I like that fundamentally. If it's an infrastructure play, I like them technically because it looked like it had a decent chance of breaking out to the upside. When it sold off the last time, it held its 200-day moving average, which I really like there. See, 200 DMA, 200-day moving average. It held that. It rallied up. I said, boy, if they report even decent numbers, it's going to break out and the stock's going to take off. So I liked it fundamentally. I liked it on the technical side. And sure enough, you see how the options, they rallied up 130%. Again, this was one where it was the earnings had just come out. So we kind of do 1 day, 2 days, and we're out. If there's a real breakout in a stock or breakdown in a stock, especially one that's very oversold, it breaks out to the upside, you can hold on to those options for a couple of weeks, depending on how far you went out. When it's an earnings announcement, you usually get that huge burst one way or the other, and then it kind of settles down. So we don't hold on to those very long. But those, again, here's some more examples of what we've been doing just in the last week and a half.
Okay, that's great. Vulcan Materials. I actually know that company. They're the provider for like the construction materials for all the roads we're building. And I mean, on top of that, you get the infrastructure bill. So I mean, fundamentals on top of technicals, on top of good numbers. Really interesting trade. So you're definitely whipping out like calls and puts in the chat room. Is there a particular expiration date, or everything varies by trade depending on what
it does vary by trade? And one of the things that we really came out, I mean, recently, it's like, for instance, people were asking me this Home Depot trade. I said, let's go out a couple of weeks. Let's go out. This was last week. And the reason for the fundamental side of things, it was that lumber had come down, the price of lumber. Oddly enough, again, you got to look at these things outside of the, well, geez, home building is still going great. Why would you be against Home Depot? I'm like, well, number one, it's because it's getting overbought. It's RSI trying to become extremely overbought. Okay, so that was a technical reason. But number two, on the fundamental side, it's funny that there's a high correlation between the price of lumber when it sees a big move. Now, like any commodity, lumber fluctuates, but when it sees a big move and it had dropped over 20%, that's usually a negative sign for Home Depot. And yet this Home Depot kept rising. So I'm like going, we have Home Depot rising to an overbought condition. We have on the technical side of things, and we have a divergence on the fundamental side of things with lumber coming down. Home Depot, I think, has got to come down. However, I also noted that the market was acting very well. Home Depot's a market stock, so let's go out 3 weeks. So we went out to you can see here the November 19th call options. The other options I had we're just talking about. Most of those were just to the end of this week. This one we went out 3 weeks because I thought I'm sorry. With Home Depot, this is Vulcan Materials, I'm sorry, but with Home Depot, we did the same thing. We went out to the 19th. We went out an extra 2 weeks so that we could so that we could make sure that give us a little leeway. I wasn't as sure on that timing. Now it hasn't worked. The stock hasn't rallied anymore, but it hasn't come down. I'm still confident that it will come down because, and I said, well, why would you stick with it after 3 days? It's kind of doing nothing. Well, number one, it hasn't gone against us. But number two, every single day, the last 3 or 4 days, the stock opens higher and slowly fades and closes on its lows of the days. So one of these days, I think it's going to open lower and trade lower. And we'll go a little bit longer. If it's not working, then we'll just bail because you don't. The whole idea is risk management. If it's not working, get out. Minimize your losses. So if you can keep those losses to a small amount, the ones where you make the 100%, 200%, 400%, more than makes up for the ones where we have some losses. It's so important to limit your losses. Everybody's got losses. The greatest traders in the world have all had losses. You can't worry about them. Move on as long as you can limit them. Those people, just let them hang. Are the ones that get burned.
Yeah, trading with a plan, absolutely. And I mean, I kind of like your plan. Obviously, doing this for 40 years, working at equity firms like Miller Tabak or Merrill Lynch or Salomon Brothers, the experience dealing with it firsthand through all the markets, all the crashes, all the corrections, all of the numbers, all the change in technology before there were even I think computers in that time, but. This is really the experience, right? The value that I see in that, someone who's a real, professional, and this is a career, and that's really great for a lot of new traders and retail traders that want to become, more successful traders with options or with stock, whichever. So we have a question here in the chat. What trade room is he speaking about? So we're talking about Matt Mayle's Inner Circle chat room. So that's pretty much a 24/7 trading room that Matt Maley runs, and you guys are welcome to join. We opened the enrollment there, so if you guys want to join, basically you can trade with Matt. All of these calls that you're seeing right now on puts, these are trades from the prior week or this week. So we're consistently giving you guys option trade ideas, stock trade ideas, married with fundamentals and technicals, a full analysis, right? Analysis from Matt Maley, a chief market strategist at a private equity firm, Miller Tabak. That's the best research you probably can get your hands on as retail. And you also have, the whole partnership of trading with Matt. For example, if you have a question about your trade, if you have a question about your strategy, a question about the markets, there's nobody better to ask than Matt for these types of things. So and quite honestly, the last 2 corrections we've had, Matt Maley has literally nailed the top, called it on these presentations. So every time Matt Maley speaks, here at Benzinga, it's like the Warren Buffett of Benzinga, you could say. So yeah, we also have a session. So every Friday, you're going to have a meeting with Matt. We're pretty much adjusting the portfolio based on what's happening in the market, getting ready for the next week, right? And wrapping up the current week. What happened? How are we going to prepare for the next week? If we have earnings coming up, if we have an important Fed announcement coming up, those kinds of things of trading with a plan, with a community. And we're going to put the link here in the chat, but I want us to get back here to the education, guys, because it's some good stuff that Matt is sharing. So feel free to go ahead, Matt. I'll just drop the link here.
Well, I just want to go back on some of these specifics we talked about, which were great. And we will go, not at the end, as we go through this, I definitely, you're going to throw individual stocks at me that we'll look at on a technical basis and talk about their fundamentals. Also ETFs, which can be very, very great tools to use as trading arms, because especially if you're like, okay, geez, I've got a lot of calls in call options in Macy's. Remember that was one of those meme stocks for a while that just took off. It's like, yeah, but you know something, I'm not, now it's had a nice run. I've got a nice profit. I don't want to sell it yet. I want it to go higher. Okay, great. Well, let's go into and let's just buy a small amount of puts in the XLY, which is the consumer discretionary ETF, just to give you a little protection. So there's things like that we can do that kind of help people. It doesn't give you a full hedge, but it also gives you a little bit of peace of mind. Like you go into overnight, it's like, geez, I don't want to blow my profit overnight and have some bad news happen overnight. You say, okay, well, let's buy some puts in this one, and that will more than make up for it, and you'll still make out with a nice profit. That's the key thing too. No matter what you do, you leave money on the table every time. I mean, it was the Baron de Rothschild that said, how did you become so wealthy? He said, because I always sold early. and it's good. I mean, the point is, don't ever, if you make a nice profit in something, oh, geez, I wish I had made that extra last 5%. If you're up 100%, well, who cares? Just pat yourself on the back and move on to the next one. But anyway, I want to go back to just what's going on right now in the marketplace, and why I think the next month and a half, and really into the new year, and for a lot longer, but especially right now, I think things are really going to be taking place that could be very important to the markets and could lead to a lot of volatility, and it already has. So there's two things going on here on a fundamental basis. Are we at a key turning point on the overall market? That's one of the things I pride myself on, is getting those key turning points in the markets, as Rodrigo talked about, the last two tops. We are getting towards some sort of a top. The thing is, it may not happen until early next year. I really thought it might happen when it was moved into September, but obviously it bounced back strongly. But there's also a reason to think the market could rally very much. So we have to stay very, very nimble. So let me just explain a little bit further why I'm saying that. Number one, we have the stock market now. It's trading, I said more than 20 times earnings. It's actually more than 21 times earnings. And at 3 times sales. So the market is very expensive. Now, it's been expensive for many months. It was expensive in the spring. So that's a lousy timing tool. But when you also have a situation where bullishness is turned up. One of the reasons why we talked about buying puts in Nvidia, puts in Tesla, was because what I look at in sentiment is this poll done by the Daily Sentiment Index that surveys futures traders. We're talking about guys who trade futures every day, not some they have these market letters and things like that. It's like, no. These are guys who are trading every single day. They were 93% bullish on the NASDAQ, on the NDX 100. That is all. I have seen it at 95 once, but that's about as extreme. And the thing about sentiment, it's an inverse relationship. When sentiment gets really bullish, that means there's nobody left to buy, and the market's going to go down. And if they get very, very bearish, that means there's nobody left to sell, and the market's going to bounce back. Bearishness really was high at the very end of September. The market bounced back. Now it got even more extreme to the other direction, and in the stock market. So it really gave me confidence to say, not only buy some puts in the QQQ, which is the NASDAQ ETF, but also in these individual names, Tesla, Advanced Micro Devices, and Nvidia. And so this is something that could become a bigger deal as we move through the next year and the end of the year. And if it doesn't become an issue, it will next year, and I'm very confident of that. The other thing, of course, is margin debt. Margin debt, we're now, again, this is kind of, this session, this little part is really more educational part of things, but margin debt, you can see the red line. See what happened when margin gets really extremely high? Got really high 2000, 2007, 2018. That was where we followed with an 18%, almost 19% correction. And look at now. But the thing about margin debt, it's not going up. It's a lousy timing tool. But it's when it rolls over, and you can see it's now just starting to roll over. And what it means was like, well, when people are adding leverage, we're adding margin, that can really push a market a lot higher. But once they start to unwind and they get margin calls, that's when the people start throwing out the baby with the bathwater, and that's when things can get really ugly. And so we're getting into that situation where at some point, I think in the next few months, we're going to have that. If the market falls enough, you get down 10%, it won't be able to stop going down. People say the market go down 10%. It's like, actually, it can't. it can go down 5 to 7%. But once you get down 10 to 12%, this massive levels of margin will start to kick in. People will get margin calls, and they'll be forced to sell whether they want to sell or not. And so the next 10 to 12% correction is going to turn into a 20% fall very quickly. Doesn't mean we're going to go into a bear market like we did in 2008 or 2000. I'm not saying that. I'm just saying that if we stay nimble, we want to be able to take advantage of these things, something that retail investors haven't been able to do in the past because they didn't have ETFs to trade with, and they didn't have weekly options. Nowadays, in the old days, the options expired every quarter. Okay, now you have weekly options in most of the major stocks, and you have 3 times a week. If you want to, hedge yourself against the S&P 500, you can buy options that expire Monday, Wednesday, or Friday. So you get all sorts of things you can do there. But the last thing, the really most important thing is, well, 2 other things. Number 1, earnings growth. You've heard, I'm sure, a zillion times, Wall Street, because they're paid to be bullish, keep telling you earnings were great. Well, they were great. And they were better than expected, but they're always better than expected. They always lower them enough so that they get beaten. Everybody's talking about how great they are. However, they were very great each quarter of this quarter. And after the first quarter, everybody raised their estimates, their full year estimates for the S&P 500. After the second quarter, the S&P 500, people were looking for S&P 500 earnings to be $166. Okay, by the middle of the summer, they were looking for $200. They raised them dramatically. Guess what happened this time? Even though these earnings estimates were fabulous, nobody raised earnings estimates for the fourth quarter or for next year. So even though earnings beat expectations, they did not raise earnings. So earnings growth is starting to slow. And when you have a market that's expensive as now, that makes things riskier. That's all. But the last thing is really important thing is the Fed is going to start to taper. But more importantly, we have China, which spent a decade or more, really encouraging taking on risk, taking on debt, taking on leverage. And now they've completely reversed that in the last year. And you can see what's been happening in their marketplace. The Fed warned last night that they're talking about how this real estate problems that they're having in China could spread to around the globe. And so there's these things happening out there that we need to be careful of. And it could cause a severe correction at any time. Right now, it looks like it's going to get pushed out to the new year, but we'll have to see. Now, okay, let's take it the other side of the effect. I don't know if you've heard a lot about this thing about gamma. We've heard about short squeezes, these meme stocks where they had real high short interest and their shorts, these stocks just rallied. But earlier in the year it was AMC and GameStop. We had Viacom, which was one we made a great play on, where we made over 2,500% return on the options there. How
much was that, Matt?
2,500. 2,500% Viacom, where, again, I've talked about the RSI. The RSI got to 95. I mean, that was just off. I said, this can't go higher. It made 2,500% in less than 2 days. And in fact, for those, some people held on and made over 10,000%. Now, I wish I could do that 4 times a year. I mean, we're lucky to get that one of those once a year. But again, there are those opportunities out there. When an Nvidia gets this overbought, when Tesla gets this overbought, you have those opportunities. Viacom's not going out of business. How could you make 2,500% on a put unless the stock went out of business? Because Viacom's not going out of business. Of course not. It's a great company. It just got way, way, way ahead of itself. And that's what happens when you have massive stimulus in the marketplace and people have no place to put their money. And these are these great opportunities that show up.
Yeah, I just want to note really quick, guys, for y'all to be aware, that is the record, all right, here at Benzinga for the most successful option trade. That is Matt Maley right there.
That worked out really well. And right now, I'll tell you, we have one that these 2 stocks that and again, we can go over it a little bit if you want. I'm sure we'll go in some individual stocks, but we'd love to. I'm sure you'd love to see Tesla and Nvidia and what the potential is for those 2 stocks. They still have potential downside here, but again, even though they're probably going higher over the long term, and that's okay. But this thing about gamma, and I don't want to get too into the weeds in it. We can talk about it. I don't know, maybe in one of my tier 3 calls, just going to talk about, or one of our Zoom meetings, just talk about specifically about this gamma issue. But what happens is that a broker dealer, whenever you go out and buy an option on a stock, the broker dealer is the one that sells it to you. Well, I mean, if you buy an option to buy Tesla, is like, and then you exercise that option. He's got to give you the stock. Well, he doesn't have the stock. He just sold you an option. So when he sells you that option, he has to turn around and buy the stock. And what happens is sometimes when people get really buying, they don't go out and buy all the stock they need to make sure they're perfectly hedged. And what happens is, then when people see that that's happening, some of these, again, you see it on the Wall Street boards and things like that, where people chat rooms and stuff, they try to gang up. But it's also some very smart hedge funds who see what's going on, and they go in and they pretend like they're an individual trader. They go into these chat rooms and they say, hey, let's buy this stock. And then they run the stock. And these dealers, again, it's forced buying. They have no choice. It's like, oh my God, I'm going to lose my shirt because all these people are going to want their Tesla stock and I don't have it to give to them. And so I've got to buy it. So, well, guess what? I have to keep paying up. They lose their shirts because they're paying $1,200 for the stock when the option, but they've got to give it to them for $1,000. So they're going to get creamed. But they have no choice because at least they'll cut their losses. Now, the same thing happens at the end of the year frequently in the big market with the big guys. Okay, you get these guys come in, they see the market up 25%, and then suddenly in September, the market starts to go down. And they're, a big mutual fund or big insurance company, and they say, hey, I want to just buy some insurance. So instead of going to the options market, because they're so big, if they go into the options market, everybody will see what they're doing. They'll buy an over-the-counter put. They'll go to a Morgan Stanley or Goldman Sachs and say, hey, sell me an out-of-the-money put. So I'm only trying to protect if the market goes down 15%. That's all I'm trying to protect against, because those are cheap options to buy. But so what happens is, since they're so far out of the money, the broker dealer only hedges a small portion of it, and that's great. So the problem is, if the market goes down, they've got to sell into a falling market. That can cause the market to crash. That's actually what happened in 1987. That's a story for another day, but that's what really happened in 1987. But in this situation, the opposite can also happen because they've hedged themselves partially. Maybe they've averaged 20%, but that's 20% on a $500 million portfolio. And they've done that to several. Suddenly they've got billions of dollars of hedges on. And all of a sudden the stock market starts rallying. It starts rallying more. It's like, oh my gosh, I just thought these things, the market was going to kind of go sideways and rally a little bit. I thought my short, these things would expire worthless, and I just cover my short at cost. And I'll just make the commission, the premium, the commission I'll make. But all of a sudden it starts rallying. They start losing more money on the short than they made on the commission. So they have no choice. It's, again, forced buying, and it pushes the market higher. So you have these artificial things that, even though a market is very expensive, they can push this market higher. So we've heard a lot lately in the last week or two, certain guys on Wall Street saying that we could see a market melt up at the end of the year. This is the real reason why it can happen, not because of the fundamentals. The fundamentals, I don't care how strong the fundamentals get, the stock market is already well ahead of them. All it would do is play catch up. But with these artificial situations that we all have to know about, and most individual traders don't know about, these are the things that can really move the market. So what I'm trying to do right now is really focus on these individual names that are way out of whack, one direction or another. And because of the way the market is today, there are a lot of those names in both sides, and see where we can look to play the odds where a reversal is going to take place. One, I got to admit, we don't get everyone. Home Depot hasn't worked yet. It hasn't hurt us yet. But one that didn't work was PayPal. PayPal was oversold, and they reported earnings, and the stock got clobbered today. And I thought, well, is the stock going to go any lower? And I'm like, I don't think it really can. It's so washed out. It's only been more oversold one other time. Well, guess what? The stock didn't bounce at all. In fact, it went down a little bit more. So we had to, bail out of that, take our loss, and move on. It will still provide another opportunity. But my point is that right now, with the market at all-time highs, there are some ones that look like good ideas on the negative side where we can buy some puts and make some good money. Right. But there's also ones that are down. And then in the middle, we have ones that haven't done a lot, but they're about to break out. So if we get this year-end rally, this gamma-led, this options-led rally, when these things break out, all that momentum money is going to focus, going to laser in on these, certain individual names that are really starting to break out. So again, technical analysis is going to be so important over the next 2 months. And I'm kind of rambling on here, but I'll say one other thing is that we also have a situation at the beginning of the year. The same thing happens because all of these institutional money managers are like, they don't care. They could say 2022 is going to be the worst year of the market, but they know they could be wrong. So if the market starts rallying at the beginning of the year, they have to buy stocks. They cannot, because they get all sorts of new money in at the beginning of the year, and they're like, I'm a guy at Fidelity Mutual Fund. I can't sit on cash because if I'm not in for the big rally at the beginning of the year, my whole year is blown. I'm either going to get fired or I'm going to get a lousy bonus. I've got to be in the market. So again, these opportunities around year end, both at the end of the year and the beginning of the year, can be very, very strong.
Okay.
Excuse me, I'm reaching, so I plug in my thing so I don't run out of juice here. Excuse me a second.
No problem. And you definitely went over a lot there, Matt. And a couple of points here that I just want to ask you some questions there. You had a point on China, right? The economy, the growth is slowing, and it's not that it's stopped, but it's not growing like it used to, and that is going to impact some sectors here that have exposure to China. Is that right?
Yeah, I mean, the one of the things it's going to be kind of more of a domino effect because people keep saying why do we worry about China? We don't care because we don't have it's not like it was back in about 10 years ago when the European banks were really in big trouble, and it's funny because I remember they bailed out Greece and people said, why would we care about bailing out Greece? Just let them go. Well, they didn't bail out Greece. They bailed out the European banks because all the European banks had these huge loans out to Greece, and they had they didn't they would have loved to let Greece just go, but they couldn't because they would have been hurt. So their Deutsche Bank and all these Paribas, these big French European banks would have gotten absolutely crushed, and so that's what they had to do. And the same thing here, where it's like China. They're Chinese banks that can they bail themselves out, but they also have big exposure, whether it be in Singapore or South Korea, Japan, etc., where these people have a lot. And then of course, we may not have big loans out to Chinese banks, but we do to their economy. And not only that, we're already seeing the people kind of South Korea, China's stock market has been able to hold up because they can artificially hold it up. They can do whatever they want with their stock market. But we see now that South Korea market is starting to head lower. It's near correction territory. Japan's stock market, they both bounced a bit, but they're not as close to their highs as our market is. And it shows that their economy, it's the second largest economy in the world. You can't go from a situation where the second largest economy in the world goes from really promoting leverage, promoting debt, promoting risk, to doing just the opposite without having somewhat of an impact on the overall global economy. And that wouldn't be a big deal if the stock market was fairly valued, if it was, but right now it's overvalued. And, people talk about, right. We don't have to worry about the Fed doing QE or ending QE with tapering. It was like, because the last time they tapered back, the stock market didn't go down. It's like, yeah, but the last time they tapered back, the stock market was trading at 14 to 15 time earnings. Now it's trading at 21 times earnings. It's just harder for the market to hold up on its own without that extra stimulus. So we have the same with China. We've got less stimulus coming from also the ECB was going to do the same thing, taper back. It presents problems.
Okay, so if we were to see any significant price action that would cause some sort of deeper correction, it would come from the Asian markets first, you would say.
That, yes, and the other thing is credit spreads. We're looking at the high yield market because, or junk bond market, however you want to call it. The people who work in that market don't like to call it junk, so they call it high yield. But we're looking at credit spreads because if people start getting nervous and they start charging higher rates for that low quality debt, that's when the spreads start to widen out. When you start to see that, and we saw that really happen in China when the real estate thing really kind of percolated in August and September, and so this Evergrande thing. But now we're starting to see a situation just literally today where we came out on Bloomberg where they're saying this thing is starting to spill over where they're not just hurting the junk bond market, but it's hurting high credit, we call it the regular credit, the investment grade credit, and where like 10 cents, suddenly their bonds are starting to sell off. The banks, the credit, the bonds for the banks in China are starting to sell off. So you can see it is starting to spread a little bit there. And at some point, again, I'm not looking for a real estate crash that we had clobbered things in 2007, 2008, but it can have that kind of an impact, especially given how our market is extended. And so that's what I'm watching. I'm looking at those Asian markets, what's going on there, and looking at credit spreads to keep a close eye on what's going on in bond markets, not just here in the U.S., but around the globe.
Okay, and I know we've been talking about this throughout the workshops that we do here, but where do you think we are right now with inflation compared to where we were like a month ago? How long do you think this can last? And do you think it's going to be an issue if it gets worse or stays the same, relatively high?
Well, I think it stays relatively high. And one of the things that it's funny because back in 2011, 2012, some people were saying the same thing, saying inflation is really going to pick up. I didn't think so at all. But there's a couple of reasons why I've changed. I've changed because the situation has changed. Number one is that I really see that the commodity market is completely turned around. We had a bear market that started in 2011. It bottomed in 2020. It's starting to rally now. It won't go up in a straight line, but we're seeing it. It's not just oil. We've all heard now. Lumber shot way up. But it's funny. People say, shot way up and then it came way back down. It's like, yes, it came way back down. But guess what? It's still about 20% higher than it had been the 10 previous years. Okay, so we're getting this big surge of inflation because of the pent-up demand. But as it's come back down, it's not going to come all the way back down. And because we have, for instance, oil demand that's just reported today, that oil, or was it yesterday, early this week, they reported that oil demand is now back to pre-pandemic levels. Okay, that's already back there. Number one. Number two, I mean, you just have the issue of the Fed having printed so much stimulus. We don't just have monetary stimulus, but we have obviously fiscal stimulus. And even though that the big thing out of New York was cut from $3.5 trillion down to $1 trillion, it's still 20% bigger than the bailout that we had in 2008. It's just massive. And when you get that much liquidity in the system, that much money floating around, inflation is inevitably going to stay high. It doesn't mean it's going to have to go back to the 1970s, but it's going to, or certainly get hyperinflation. But it does mean it will almost certainly stay higher than it had been. So even though we'll see some relief, I think that longer term interest rates will eventually head higher. And it was interesting, about 2 weeks ago, might have been 3, on CNBC, they had their midday show, and it was the 10th anniversary of it. And they had a number of very, very successful hedge fund managers, I mean, really legendary guys. And each one of them was talking about how interest rates are going to. David Tepper was one of the best. He's more of a bond guy, but his calls on the stock market have been unbelievable. And he can't come out and say I'm bearish because he doesn't want to get a cause for causing the market to go down. But he was just saying, long-term bonds are going. What's going to happen when long-term bonds go to 2.5%? 2.5%. That's again, that's still very low on a long-term basis. But when a stock market is the last time interest rates were 2.5%, the S&P was trading at 18 times earnings, not 21, 22 times earnings. That takes the S&P down below the 20% correction. So there's and even Paul Tudor Jones, another very famous guy, saying that if we get to 2.5%, the market would be 35% overvalued. But it was classic. They said, so you think the market's going down 35%? He said, no, I didn't say that. I said the market would be 35% overvalued. That's the same thing, but he just didn't want to get quoted as saying he thought the market was going down 35%. And I'm not saying that either. I'm just saying that as interest rates move up because of inflation, it's going to be a problem.
Okay, great. So now, since you did mention yields there, just a quick question here. So, I mean, stocks have been going up, I think, for 9 days straight. Yields have been going up as well. What's the deal? Which one is wrong?
Well, it's going to be interesting here, and I'll just pull up my Bloomberg here. Now, this is the 10-year yield. Now, it had been going up, but it has come down recently. Okay. Now this looks a little funny. It says 40. This is a index, but so that 14.32 that it shows on there. Let me get some of these lines out of here. I'm sorry. 14.32 equates to 1.43%. So you just move the decimal over one spot. But let me get some of these out of there. Okay, good. Now you see, they've come down. This is going to be a problem. Tomorrow we get the consumer price index, the CPI. If that's not enough to get these these yields to bounce back, it'll be a show that and again, this is the 200-day moving average. if we can't regain that 200-day moving average for the yield, and yields means it's probably going to signal that yields are going to stay down a little bit. And that's why and I love the bank stocks longer term. I like them intermediate term. But if these yields stay lower, the bank stocks are going to have to come down. And so again, there's one where even though I like them long term and love them long term, I think this is a group where people, because even though these have come down quite a bit, the KBE, which is the bank ETF, there's also the KRE, which is the regional bank ETF. But look at this. Look at this. It's up at its all-time highs. So there's this divergence that's developed between interest rates in the last 2 weeks or last week, interest rates and banks. And if the CPI is not enough to keep on the banks, keep rates, or let me say again, if the CPI number, the inflation consumer price index number, is not enough to get interest rates to bounce back, these banks are going to go, uh-oh, we got to take some profits, these traders. So you're going to see this group come down. So I'm looking at some of these tomorrow after 8:30 when that number comes out. If it does not move the bond market, we're going to be looking at some put options in the JP Morgans, the most overbought banks. Again, you can buy it in the KBE as well, just in the KBE ETF. But I'll be looking. There's a.
What's your favorite bank stock?
Well, here's one that I love on regional banks. It's not my favorite. I'll show you my favorite in a second. But okay, there we go. Signature Bank. Okay. Great, look at this great move, but look how high it is. It has not reacted to the decline in interest rates at all. When interest rates were doing, we're still going up a little bit. The stock did nothing. When interest rates finally when interest rates were going down, the stock didn't do much. It rallied a little bit, but then when the interest rates started going up, the stock just took off. But guess what? Interest rates are now starting to go down a little bit. Well, they don't believe it. They don't believe it. It's like, no, they're not going to go down. Okay, but if we don't get it tomorrow, people are going to say, wait a minute. If inflation concerns can't take the market higher, I got to take some profits. So here's going to be a stock that we're going to look at their options tomorrow. But at the same time, for individual investors, we're going to look at the ones that are a little bit more fairly priced. In other words, to buy options on a $300 stock, that can be expensive. But where something like, JP Morgan's a bad example.
I just want to give a quick shout out here to Mary, Joanne, and Tim for joining here in the chat room with Matt Maley.
Welcome to the family, welcome aboard. Thanks so much. But look at here at Bank of America. It's a $46 stock, and it's starting to roll over a little bit there. The RSI, it had been overbought. It's starting to roll over. This one's sniffing out lower interest rates. So this is one that if we don't, we're going to probably. And let me look at another one. Another chart here. And this is something we look at all the time, all day long. There's the stocks I've never even heard of. Well, I would say that. But certs I'm not very familiar with. The people say, what do you think of the stock? And I say, I don't know a thing about its fundamentals. But I'll look at the chart at you, and we get some great ideas. So believe me, not all the ideas are my ideas. These are ideas where people come in and say, what do you think of this? What do you think of that? And suddenly it creates all sorts of new ideas. Because, I mean, one person cannot come with a million ideas. That doesn't, you try too hard, and it ends up you're making it more losers than you have winners. But here's another one here. Look at this, what we call the MACD chart, okay? And I always have to write it down because I forget. Moving Average Convergence Divergence is what it stands for, MACD, okay? Now, what the heck are you talking about, Maylie? What does that mean? Why would I care? It sounds like mumbo-jumbo. But what it is, I'm sure a lot of you have heard a golden cross or a death cross. A golden cross is when the 50-day moving average crosses above the 200-day moving average. And when that happens with many stocks and many indexes, it's usually very bullish. It doesn't get it right at a turning point. It gets it right a little bit after a turning point. But it confirms that a move higher, a reversal higher is taking place, and it should go much higher. The opposite is a death cross, which you get a 50-day moving average crossing below the 200-day moving average. And that, again, doesn't happen right at the top, but it tells you that it confirms that the trend has changed from up to down, and you want to be selling stock or buying puts going out several weeks. Now, MACD cross is very similar, but it uses 9 and 12-day moving averages. Okay, so it's a much shorter term tool. As you can see here, you see where they've had a negative cross. The white line has seen a negative cross. Looked like it here. It looks like it was going to have a cross. That was a big head fake. So we didn't want to get short the stock. We didn't want to buy puts because the cross didn't take place. Now it is. So I'm getting more. See what happened the last time? We saw a confirmed negative MACD cross. Okay, the stock went down for a month. Now let's see here. I just want to give you the exact how much it fell, but okay, that's a 10% decline. Well, guess what? Those options probably, those put options probably went up 200% during that decline. Okay, so again, we don't have to, people sit there going, oh gosh, I made 150% because I waited a little bit. I didn't make 220%. Don't worry about that. You waited a little bit to get the confirmation, so you're more comfortable making that call. And it's like, and you made 150%. Don't worry about that. Don't worry about leaving money on the table, especially when you make a big gain. But here, again, look what happened with this negative cross. See, big sell-off there. Again, I got my own. Look at this cross over here, which was very similar to the one we're seeing now because it came from an elevated area. And sure enough, that created a sell-off back at the beginning of the year. About 15, about let's say 10 to 12%. Again, that's probably 200 or 300% in the put options. So these are the types of things that I'm looking at right now for later in this week. What are some potential ones? There's some days where you go, geez, there's just not much going on, the middle of July or August, and things, there's not a lot to talk about. So you can focus on just a few things and really concentrate and make some nice money. But when the markets are doing this, are as active as they are right now, you can get a lot of different things in any given week. And so even though we had some nice moves in the, already seen some nice moves and made some nice money in some of these big cap tech names, I'm looking at some of these bank names for some other, some good opportunities there. And even though they're not, well, again, okay. I go back to the RSI chart on this one, relative strength index, you can see in Bank America, it got overbought, but not crazy overbought like Nvidia did, not unbelievably overbought like Tesla was, but they're still overbought. Again, this number is 70. That's why it's a red line. Okay, it means stop, sell. And the line down here is at 20, is at 30. That's green. That's buy. Go buy. So when it gets down to here, it's a good buy signal. See how when Bank of America got down to that level, it was a nice short-term buy signal. Here it's been kind of riding along, but look at that. It's just, you can see how it's losing steam. They say what we sometimes refer to as a rounded top, but that's also what. But I don't want to get too much into that stuff. But you can see here too. Again, I have too many lines on there, so let me take away. I'll take away the 100-day moving average and the 50-day moving average. So now we just have the 200-day moving average. Now you can see how this 200-day moving average provided nice support back in September. Well, that's a big drop. I mean, it's $6, but that's to be a math major, that's about 20% drop. That would be something. I don't know that that's going to be quite that bad. But my point is that the reason why I want to do it is I want to draw a trend line. Again, going back, the fundamental side of it, if interest rates are going to surprise people and continue to stay down, at least lower than they were a month ago, that's going to be negative for this group. The technical thing I just told you about the MACD chart cross, and now look at this. It's testing its trend line going back to those September lows. Okay, it breaks below that line after a negative MACD cross, and interest rates aren't doing the right thing. This could be a great opportunity to buy some puts in the stock. Even though I love the stock, I happen to know Brian Moynihan. He's an unbelievable manager. He's done an unbelievable job. He's going to stay there for another decade. It's this, you want to own this stock on a long-term basis. If you own this stock on a long-term basis, I'm not saying you should sell it, but even though you own it, there's nothing wrong with going in and say, hey, I'll buy a few put options on this thing, and I can, and guess what happens? The stock goes down to its 200-day moving average, and you make a nice profit on your options. Then you take those profits and put it back on the common stock, and now even more at better price. So there's all sorts of strategies you can play with.
So these are all the different strategies that you're applying in the chat room with your members. So even if you're bullish on a stock, I mean, at the end of the day, we're trading. We're not getting married to a stock. So if you believe that the stock is going to go down, you're able to hedge and then use those profits to get in. So different strategies in the chat room for options. I like it. Very interesting. Very interesting.
Yeah. And like I said, everybody should have a nice, a big bucket of money where for those long-term 3, 5, 1 to 3 years, 3 to 5 years, whatever it happens to be, long-term, and for your younger people, 20-year horizons. And those are great. But you can trade around those positions. If we have a second, I'll just show you something that we've done here. Before, let's see if I can pull it up at the right one here. Okay, here's the energy ETF. Now this is an old chart. This only, oh no, I guess it's not that old, but here's a situation where I love the energy sector. This time last year, or actually it was in October of last year, everybody hated the energy stocks. They were ridiculously underowned. The sentiment, nobody institutions own them. Everybody's fossil fuels are dead. And the one thing on the fundamental side, I said, yes, they're going to be dead, but we're not there yet to go into a situation where we can have, it's a decade from now, we're still going to have to rely on some fossil fuels. And these companies are making the transition, but we still need them. Rightly or wrongly, and if you have, if you want to, for some people don't want to buy tobacco stocks, I understand that. Cannabis stocks, I understand that. And so maybe you have the same situation here. But the reality of the matter is that we are going to have to use some fossil fuels for a while. And when stocks get ridiculously oversold, even though long term they're going to go out of business, it doesn't mean that they can't take advantage of it. So I was pounding the table this last year saying, you've got to buy these energy stocks, got to buy these energy stocks. It's worked out really well. However, even though I've said that, we've also traded around that theme for a while. And let me show you here. See where I wrote buy? That's where I initially put the buy. It actually went down a little bit, but not very much. I didn't say buy call options. I just said buy the stocks, like the XOP ETF and the XLE ETF. But then they started rallying. It broke above its 200-day moving average. That was bullish. And then the group came down a little bit. And I was like, okay, people are getting nervous. Oh, gee, should we get out of that? And I'm like, no. Look at this. We just got a golden cross, okay, where the 50-day moving average crossed above the 200-day moving average, which is the purple line, okay? And I said, double down. I said, not only do not sell, double down. This is going to go a lot higher. Well, sure enough, it kept rallying all the way in here. And finally, when the RSI, remember back here is when I got into it, because the RSI was really, really oversold. Now it was getting overbought. And so I said, let's take some profits. Let's cut our positions in half and walk away for a while. We got back into them, but then when it came down here, I went back to a full position, and the stocks kind of went sideways, then rallied up again. And then again, the RSI got really expensive, so I said, take some profits. And we cut it in half. Back to a full position again when I should have done it here, but I was a little nervous there for a couple of fundamental reasons. But when it bounced back and it came back to that oversold condition, I didn't circle it on this chart, but I should have, but went back to a full position. And then it rallied back again, okay? And then in the middle of October, I said, let's take some profits, but stay close. And literally this week, I was saying, okay, now we can go back in. The group didn't come down very much like it did a couple of times, but I'm like, get back in. We're in a full position now. So we can trade around these things. And then at other times, like for here, when I said double down, this is where you buy the call options, okay? Take some profits here. This is where you can buy some put options. And some people say, I'm going to both take some profits and buy some puts. Other people said, no, I love them long term, so I'm just going to buy some puts, make a little extra money, and when it comes back down here, like we talked about just a minute ago, I'll take that profits from there and just add to my position. And again, there's ways to move around this. So this is what we're constantly talking about. And it's funny because on the chat, we do tend to focus on the more short-term the next few weeks, but I'm going to look more and more talk more and more on this on the chat site, like I do on a tier 3 call. That's Monday, Wednesday, and Friday, but on these kind of opportunities when we can move in and out of things that we like on a long-term basis, it's still keep that core holding and then still trade around it from time to time, both in and out of the stock and in and out of options.
Matt, I remember about 2 years ago, you were pounding the table on commodities. Can you show us in the chart exactly where in the chart so that everybody can
pull that. So we'll just do the CRY commodity index. Okay, I'm sorry, it's a CRB commodity index. The symbol happens to be CRI, so that's why I said that. But the CRB commodity index, it's an index put up by Jeffries, and that's not long of a term. Let's go back 2000. Okay, now again, I have too many lines here, so I'll get rid of some of them. Let's get rid of that. But I'll just say, I don't want to pat myself on the back too much, but we're all in sales to a certain degree, and it's fact, it's true. Back in here, I said, get the heck out of commodities. And the reason for that is that the Fed was out complaining that too much of their QE money was going into commodities. And so I felt they were going to do something.
That's 2011.
Yeah, 2011.
Okay.
Try to divert some of this QE money back into the stock market, which they said that's where they wanted the money to go. Well, and again, this huge rally we saw that year. Well, sure enough, as soon as they announced, a couple things happened. Number one, Glencore, which is a Swiss company, Swiss commodities company, they've been private for 25 years, suddenly went public. They sold their shares to the public. I was like, whoa, 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 whoa. People don't sell their share. Companies who've been private, some companies have been private for 3 or 4 years. They need a little extra money, or maybe their venture capital investors want to take some profits. So you go public, fine. But when a company's been private, it's completely owned by the people in the company, and they decide to go public. That tells you something, okay? That's when the insiders are saying that's a top. Think about this. 1999. Guess who went public? Goldman Sachs. They have a privately held partnership for 100 years. They went public in 1999. What happened in 2000? The market crashed. Blackstone, not BlackRock, Blackstone, one of probably the best venture capital private equity firm in the world. They had been private since 1982, all privately owned. They didn't have any venture capital guys they had to worry about. They sold in 2000, the summer of 2007. What happened a couple of months later? The top came, and of course the great financial crisis took place. They saw it coming. So when I saw these really smart guys in the commodities area start selling, I'm like, I got to stand up and listen. And then shortly after that, about a month later or 2 months later, the CBOT, Chicago Board of Trade, raised the margin requirements on all sorts of different options, all sorts of different commodities, especially the best known ones like oil, gold, and such. And sure enough, this horrible bear market. But then it came down here in June of 2020. And I used technical analysis. You see how oversold it was. That's the relative strength index. But let's look at the weekly one. Look how oversold the weekly RSI was. Now, so I said, geez, at the worst case scenario, we're going to get this kind of a rally, which doesn't look like much, but on a percentage basis, it was actually a very strong one. But I also, let's see how much, see, that was 11%. But it was incredibly oversold. So on a technical basis, I loved it. But also, again, it was ridiculously underowned asset class. Everybody hated it. The sentiment was ridiculously low. The futures traders, their positions, everybody was short commodities. Everybody, whether it be oil, wheat, lumber, you name it, corn, pork bellies, whatever happened to be, they were all short. It's like there was nobody left to sell. I said, and I really felt, for a number of other different fundamental reasons, I thought this would be something that could last many years. But a worst case scenario, I said, we got to buy oil. We got to buy. And remember, oil went to negative territory. Negative. It's like, this is out of control. Let's buy this thing, and there's been nothing but straight up since. So that's why I made that call. Again, basing it on a combination of positioning, sentiment, technical analysis, and fundamental analysis.
Matt, and I just want to, what you said had such it's so accurate. And I actually went now and I looked at the chart for Coinbase. They IPO'd in about mid-April, and they tanked. Bitcoin tanked literally a week, 2 weeks after. So
absolutely,
there's definitely some truth to that.
Yeah.
When they go public, it's kind of like a,
Yeah, it's seven now. Now here's something here. Now here's of course the chart in Tesla, and this is what again we remember we talked about how overbought it was. Now these are the types of things that really irk me, and because for most of us, and I certainly didn't know this until today, but especially if you're not in the marketplace overall. I mean, I don't know if you guys heard about this, but late in the day, or at least at some point this afternoon, it became public that Elon Musk's brother sold over $100 million worth of Tesla stock on Friday. Okay, and then on Saturday, his brother Elon Musk came out and said, I'm sure you've heard this by now, that he said, I'm going to put it on Twitter to find out whether I should sell my stock, which was of course ridiculous because he needed to sell it anyway because he's got a tax. His options are about to expire, his 10 years options, and when a guy like that, he has obviously I mean, you're trying to tell me it's a coincidence that he sold $100 million worth of stock? I mean, it's 17% higher. He sold the stock all on Friday, not spread out over 2 months. He sold over $100 million worth of stock on Friday at $1,229 was the average price. That's an insider. That's
his brother did the same thing last time when it topped. Last time he was
And so look what happened here. I mean, it wasn't just he's gonna. It's just I think the stock could go lower, and if it goes lower from here, that's okay. Okay, guess what? Okay, let me get rid of some of these lines, okay? Because you just drive you crazy. I have too many lines. I apologize, but look at this. From the lows, we all know the lows of March 2020 because that was the pandemic lows. Okay, this stock drops to 800. I don't think it'll drop that far, but I think it's a good chance it'll drop. I think a decent chance it drops to 900. You could drop another. Let's see here. Stock's already down, what, 14% or something? The stock could drop another 20% and still not even be really very close to its trend line. It'd still be well above that trend line. So its upward trend will still be intact. And again, this goes back to this thing. It's like, how can I love to use that Amazon thing. I mean, Amazon is maybe one of the best stocks of all time. But frequently, because the story was so good, the stock got way too far ahead of itself a couple of dozen times. Same thing has happened to Tesla. And I think just recently it's happened other times. It doesn't mean, remember when certain people were saying this company is worth zero, it's going out of business. Not a lot of people saying that anymore. Doesn't mean just because I say the stock can go down another 10 to 15%, doesn't mean I think it's going out of business. Doesn't mean I think the fundamentals stink. It's just that sometimes stocks, especially ones with really good stories, get way too far ahead of themselves, especially in a situation when there's so much liquidity sloshing around and no place to go. So it goes into the hot stocks, and it creates unbelievable opportunities.
Yeah, definitely. I mean, we've been following Tesla really closely here, and it looks like a lot of people kind of like Tesla there. So, Matt, did you have anything in your presentation there that you did want to highlight there, or did you want to jump to tickers? Let me know.
Yeah, we kind of went over the names that we've been highlighting. I mean, the one we can talk about. Well, I've already kind of talked about Nvidia and Tesla. We just go into any tickers that people want to look at. The only other one I mentioned, again, if you look at the things, XLY. Here's one where I should have mentioned that before. We looked at the puts there. A little early, people were getting a little nervous because it's like, you sure you think that? I said, look, again, the RSI was getting incredibly overbought. And people are like, wait a minute, we're going into Christmas season. There's not going to be enough thing on the shelves. People are going to be paying whatever they can just to get some presents. The retailers are going to sell out. And I'm like, that's great. However, the XLY, MEMB, those are the members, the XLY. Look what the number one is, Tesla. And I knew Tesla was probably going to fall. So I said, what's another way to play this trade? Let's buy some puts on the XLY. So again, and then so it's just, there's just so many different ways you can play this thing. A lot of people don't necessarily think about. But here's one, and we're still letting this one ride, but there's ones that are up about 130%. We have owned those for about 4 or 5 days. Actually, about 4 or 5 days. But again, the stock's come down. It kind of went up a little bit, so the money we were down. We were in the hole, but not much. And then it's rolled out, and today it really exploded to the upside. So,
MVIS. This has been a sweetheart for you. So since before it popped on the first time, I remember.
Right. So yeah, I'd love to look at some tickers, and we can, and I'm sure things will come to mind as I think about it. But again, okay, we can talk about specific banks that I'm really looking at. But to go back to what we just talked about earlier, when I talked about Amgen, Vulcan Materials, and some of these others, it doesn't always have to be the Microsofts, the Apples, these high-flying tech names. You can, and so many people are focused on those, and that's great. But it's the ones where that you can really knock out of the park are the ones that nobody's focusing on. Well, that's how Viacom came along, where people are like, they were so focused on AMC and GameStop, and I was like going, wait a minute, look at Viacom. And nobody was looking at it, and we killed it when most people didn't even notice it. They didn't even notice it was up that much.
Okay. All right. All right. Sounds good. I mean, I've been bullish on this one for a while because of the technology, but all right, it's everybody's favorite time of the day. It's time to go over some tickers. Don't spam the boards, please. One ticker per person, and throw the tickers down, guys. We'll give you a couple seconds there.
Sure.
Melly, we got Melly. Mercado Libre. Yes, the ticker is MELI.
Oh, I'm sorry. I thought you were okay.
Yeah, that's a competitor.
Maley, I was like, well, sounded like my name, so it's like, okay. Here's okay. Hold on a second. Let me. I have to go back a little bit of ways. 201.
And if you can point out maybe like, how you would possibly maybe if it's actionable, how would you maybe put in an option trade there or call or maybe not do anything at all, whatever you see fit.
This stock is starting to get, it's had this nice little rally here, and I can zoom this in because we don't need to go back that far. Okay, now look at what's, one thing I want to see here. No, number one, this thing's starting to roll over. See the 50-day, even though the stock's rallying, it's losing momentum, and it's starting to get pushed towards overbought. So I'm not quite there yet. Now, look what happened the last time the 50-day moving average crossed below the 2. It didn't go down. It's like, oh, wait a minute. Why would I care about that? But in this case, this doesn't count as a death cross because the 200-day moving average was rising. They both have to be falling. They both start falling right now. Now, they haven't crossed, so I'll keep an eye on that. So I guess my point right now is that there are other stocks that are probably a little bit better. I think it has more upside here. And the other thing in the options of this one, it's a $1,700 stock. And that gets to be really expensive in the options. And look at the wide spreads. See how the options, the open interest is very small. It's just a couple, it's a dozen. You really want to see it in several hundred. And the spreads, I mean, we have $4 spreads between these, and $4 to $5 spreads between the bid and ask. That makes it very, very tough. These dealers can just steal you blind on these really expensive ones. So to me, looking at the chart, I think it's got some more upside near term. It's starting to set up for a rollover, but this really isn't a great options play. It's just because it's so expensive. And, I really like it when lower price when there's many of them, most of them have no more than 5 to 10 cents between the bid and the ask. And they're much more liquid. And so, even if you get it right and you buy some nice options, if they're not very liquid and there's nobody there to buy it, you can't make your profit. By the time you sell it, you've given away all your profit. So just be careful on those really high price ones.
Right. Okay. And just to make sure everybody here's on the same page, all of the possible trades that we are going over, these are possible trades that Matt will be following up in the chat room. So for the members, they're going to get the sneak peek, right? They're going to be able to get the full on follow up on these option trades, possible option trades that we're going over now. The first one here being Mercado Libre. Let's see another one here AMD.
Yeah, AMD. Okay. Well, this is one where I actually suggested buying some puts today. Again, look at this, how overbought how it is. This one, what I'm looking at right now, again, great company. Whoops. The stock has acted really, really well. People were asking me, should I buy? I mentioned when it got to 115, people were saying, should I buy some puts? And I said, no. And the reason was there was no MACD cross. It wasn't crazy overbought. Now it is. Now the stock bounced back nicely today. It closed well off its lows, unlike Tesla, unlike Nvidia. So I had said today, buy the $150 put options that expire next Friday, which is the 19th. These are the ones I'm looking at right now still. And it's definitely one I'll be updating because we talked about it today. We're going to be talking about it tomorrow. We'll see how it opens up. And then one of the things that we do here is if you get a if we get a move below. See this one day when it had this, it had the announcement with Facebook or Meta, what they call themselves now. You break below this 137, 138 level. That's going to be, that means it is reversed 100% of that positive news, and the stock's going to fall like a stone. But again, look, going back, let's go back to the RSI chart. Great company taking market share from Intel, but look at this thing. Its RSI got to 89, okay? It's 84 today, but yesterday it was at 89 in the middle of the day. Do I have the weekly? Okay. Now, you have to go back. You go back. It's only had 2 other times in the last decade that it was that overbought. Okay, this was back in September, and it was even more. It looks like it's that high, but it wasn't that high. Look at September. Look what happened to the stock. Again, you say, "Oh my gosh, it's a great company. It's making all-time highs. It's had all-time highs. It's had great rally." But guess what? The stock went down 15% in September, in August and September. Okay, you own those puts then. You did very, very well. You made a lot more than 15%. That's for darn sure. And today they were up a little bit. The puts were up a little bit because the stock was down. This is one that I love longer term. It's going to provide, when it sells off, it's going to provide a great buying opportunity. We're going to buy those calls. This is not the time to buy the calls. If I'm wrong about the puts, it's going to be very, very difficult for this stock to go any higher. So if you like it, that's great. I understand why you like it. I just don't think it's a good one on the buy side right now. If anything, it's one on the sell side, on the negative side, on a short-term basis.
Right, right. So the $1 million question here, Matt, AMD or Nvidia, and why?
Well, Nvidia fell a lot today. So, I mean, some of that, I mean, people said to me, who asked me today, should I take some profits? And they did, made some good money. But look at that, how much closer to its highs for the, its lows for the day, well off its highs. But look at its RSI chart. It's still at 87. So I like them both. If I had to do it, okay, so on the Nvidia, I was talking about either the 305s or the $300 puts. You can look at this Friday, the 12th, or next Friday, the 19th. Either one. Because it's a high-priced stock, and not crazy high price, but it's a high, it's in the hundreds. They're a little bit more expensive. You can go with that one. It's like, I like to look at, for some people today, we talked about on the chat room, rolling them. In other words, if you own the Friday, you'll make a nice profit. Just roll them from the 12th to the 19th, gives you a little bit longer term exposure. So if it falls further, because it won't fall every single day between now and next Friday, it's a good way to play it. But that's one of the ones I'm looking for right now, the 305 and the $300 puts. Now that it's pulled back, the $300 puts are probably the better play. And again, we'll see how it opens tomorrow. I'm a little worried that this stock may open down, but if anything in the last couple of weeks has told me anything, is do not fight the tape, and this thing could open back up. But it's just, again, when you get an RSI it may not go down for very long, and it still may go a lot higher. But look what it did in July. Again, the stock went down, and look what happened to Tesla today. Tesla's down 11% one day. These stocks can fall that much because Nvidia is up 50%. Let's go back. Let's go here, Nvidia. Okay, from March. Shoot, my thing's frozen up a little bit. But let's see, the stock was at $75. So the stock more than doubled. Okay, the stock more than doubled from March until October. Right? It was up, well, about doubled. It doubled when it was up here, came down a little bit. It's already up 75%. 75%. I don't, this is not a brand new stock. This company's been around a long time. Stock's up 75%. Then, after it's up 75%, it rallied another 50% in just 5 weeks. That's what it's done here. And it's RSI off the charts. This is a stock that I don't want to say cannot rally anymore. Anything can happen. But this is ripe for a further pullback. And like with Tesla, if it pulls back down into and let me give you some where I think it could go, which is something I was asked today in the chat room. Here's what we do: is I don't know if you're familiar with Fibonacci relationships or Fibonacci retracements. Mathematician Fibonacci from the 16th century or 14th century, and it's amazing how well this thing works. How so many different relationships, but They have a 38.2% relationship. This stock, I would be surprised if it didn't drop to 265 at some point in the next couple of weeks. And that's going to be a big decline, but it's still going to be well in its upside target. And it's going to provide an unbelievable buying opportunity. It could even fall as far as 250, which would be a 50% retracement. But these are the types of things that can happen. And people is like, well, that can't happen with Nvidia. Well, people told me the same thing about Tesla. There was a guy on the site said there's absolutely no way this could happen. And look how much it retraced from those, from September when it really, from the early October level when it really took off. The retracement took off when everything else took off. Bang. Sure enough, it's retraced about 50% of its sell-off. So people don't think that can happen. It does. And I think it's probably going to happen to Nvidia.
Right. Okay. All right. Interesting take there. Let's go here with UPST.
Yes.
So that was a big
this has been one we've traded on the chat many times. One of the guys here, and he's hoping that he, this while we're talking here, I'm just going to do very quickly. See if I can bring up a new. I'm just going to put a. I'm going to find out where it's trading right now because it was down. It was down 20% last I saw in post market. Reported earnings today, and I don't want to screw up my screen, my Bloomberg screen, so I'm just going to pull it up here. And UPST. Okay. There it is. Yeah, it's down 19.9% in aftermarket trading. 253. Ouch. This is really not good for the stock. And look at this on a technical basis. This is going to take it well below its 50-day moving average. If it's going to give it a key lower low below this late of October low. Get rid of those. It's another thing. One of the best known patterns is a head and shoulders pattern. And this is a neckline. The necklines aren't always straight across. In fact, they're usually not straight across. There's the head, there's the shoulder, there's the right shoulder. It's going to open at 253. It's going to close well below that right shoulder. This is really, it's not oversold. You can see from here, it'll get oversold quickly. So here's a name where the person in the chat site, he owns some puts in it. He loves it. He said, what do I do here? I said, I don't know how the earnings are going to go. But boy, the stock looks like it's going to trouble. And if it breaks below this, it's going to have a lot of problems. Well, guess what? It's down 20%. He's going to make a lot of money on those puts. He's scared to death that stock will bounce back before it opens tomorrow. But having said that, let's see it wash out, see how much it washes out. I don't want to react immediately to it, but at some point soon, in the next week or two, this is going to be one where it's going to get completely washed out, and we're going to look to buy some calls in the name, and we'll usually go, at the money. So, especially if it gets down to that 250 level and can really show a solid base there, we'll look to it. But trying to catch the falling knife, especially out of when they have a fundamental earnings report that is knocking the stock down. That's tough to really. Now you're using guesswork rather than real educated analysis, I guess is my point to say. So this is one I'm not going to play right now, but we'll be looking at the calls of this one at some time, and maybe in just a few days, but certainly in the next couple of weeks.
Okay, all right. Let's go to American Airlines, AAL.
Oops. There we go. Okay. This stock, geez, I want this stock to go, but I mean, it's interesting because we have a situation where, you hear this thing with all these airlines are going to start paying their people, extra money to be there during the holidays, but that cuts into margins. What I like about this, what I'm really thinking right here, I guess, in this stock is that I just wish, see how overbought it is? The last time its RSI got, the last two times it got to this level, the stock sold off. But it's been trading in this sideways range, since July. And oops. See, it's been in the sideways range for a while now. And if it can break out of that range, it is going to take off. What my thinking is that the stock, because it's overbought, will probably give back a little bit. Let's take it maybe down. This is the purple line, the 200-day moving average. Take it down to this 200-day moving average. Work off a little bit of this thing, and then we take it. So once it breaks above 20, again, I like to wait. I'll have much more confidence. When it breaks above that 22.50 level, then I'm going to look at the $23 call options and load up, because once it breaks out, it's going to go to 26 pretty darn quickly. If it can break above that, it's going to be really good, because that's a double top. But it really looks like it wants to go up. But I'm a little concerned because it's getting overbought on its RSI chart. Let's look at another study real quickly. The Bollinger Bands. I'm not sure if you're familiar with that, but yeah, okay, let me get rid of some of these lines. Get rid of that. And I'm going to get rid of these. Are what we call Bollinger Bands. And again, something we talk about a lot in the chat room. But this gray line or green line, gray line, that's the 20-day moving average for the stock. The purple line is 2 standard deviations above that 20-day, and the yellow or gold line is 2 standard deviations below that. As you can see, when it gets above those 2 standard deviations, it's getting extended. It means it's probably going to come down. So we have an overbought RSI chart. We have it above it's more than 2 standard deviations above its 20-day moving average. So it's really extended near term. That tells me it's not going to break out of that range immediately. But this is one that we're looking very closely, because man, everybody I talk to wants to travel this holiday, and now we're opening up with overseas flights. Europeans can finally come to the U.S. I think things could change, and with this stock and go higher once it works off the short. Let me look at one more thing here on the technical side. I'm sorry to keep. I don't know why my. Well, I can't. There we go. Now this is going to be a very simple chart. It's just going to be its price, nothing else. Just this price. Boom. There's the price. Look at what it's done here that I really like. If it wasn't overbought, I'd be really pounding this one. But so I guess my point is, if you like the stock, nibble here. And I think it's too early for the options. Nibble a little bit, and then when it breaks out, then you can really add to the name. Don't be afraid to. That's the biggest mistake people do. Don't be afraid to add to winning positions. And but look at this.
Yeah, I learned that from you.
Yeah. So it's broken above its trend line, so that's really good. So a little pullback, but let me just this point that Rodrigo mentioned. If you own especially when you're stock options, a little bit different because you're playing them here and there. You can you definitely can add to a situation when it's fast moving. But in a stock, if you buy this stock at 22, okay, and you just nibble on it, and the stock goes to 24, and you double and you buy it more, okay, your average price is 23, okay. I say, I wish I had bought it all at 22. Well, guess what? Don't cry, because you have an average price of 23 and it's at 20. The stock's at 24. You're guaranteed to win. Now your stop out price, you always want to have a stop on all your positions. Have a stop out price at 23. And unless they, again, that can be nerve wracking around an earnings report, because the stock can gap up one way or the other. Mm-hmm. But if the stock trades back down to 23, it's like, okay, I'm out. It cost me nothing. Especially with a common stock, I pay no commission on the way in. I pay no commission on the way out. Worst I can do is break even. And then stock goes to 26. Then I raise my stop to 24. I'm guaranteed a profit. And you keep following all the way up until it gets overbought. Then you can, or you don't like the fundamentals anymore, or it gets too expensive, and you take the profit. But don't be afraid. The thing is, if you do the opposite and buy a whole lot here and then buy a whole lot more at 20, your average price is 21. The stock's at 20. You've got a losing position. It's not great risk management, because now you're just hoping that the thing bounces back. Hope's not a good investment strategy.
Okay. All right. So putting that one here to the watch list as well for the chat members. And we have another one here. I think you might know this one, Matt, from Sunset VIAC, Viacom.
Oh, yeah. Okay. Now, this is where again, this was there was the RSI that I was talking about. I'll come back to this chart in a second. I'm just going to show the weekly chart. The weekly chart, the weekly RSI was almost 100, 97, 95, I'm sorry. Can't believe that. So it was the easiest call in the world. Look at this stock. It just got crushed. I wish I got one of those a week. We'd all retire, by the end of the year. But hold on one second. Go back to the daily chart. So let's go back to the chart here. Oops. Oh, no, I'm sorry. Okay. I'm just going to start out all over. CVIA, C. Okay, there we go. Okay, the stock has done a great big nothing for a while. It's a stock I like. We have fundamentally it's a great stock. I guess it just wore out investors. So again, the stock is oversold. It's a stock that I would you can look at if you want to buy the options on this thing. This is one where, if it just keeps trading sideways, you make nothing because they don't make anything. So if you buy the options in this one, you don't want to own them for very long. If it's not working, just take your, because obviously as we know, as time goes forward, the options, the time value of those options wear out. So you don't want to just own it forever. So right now, what I'm looking at is the 40, let's see here. Great. The 39 level is its 50-day moving average, and that has kind of played as a decent resistance for the stock for a while. So I wish I could tell you that this is one we really want to step to the plate and buy. But see how it's let me go zoom in a little bit further. I'll get rid of the MACD chart. Okay. See how it's got a little above the 50-day moving average, but hasn't been able to close above it. So I'm looking at 39. If this stock can get above 39 and break above it and hold above it, that's when I'm going to buy the $40 calls going out 2 weeks or so, and that thing's just going to take off. But that's, you can see, just key resistance. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, it's 10 different times. It's been probably 15 different days where it's either gotten right up to it or slightly above it, but hasn't fallen right back. Once it finally breaks above that line, that's going to be the key signal to buy the stock. And again, this is a tough one for options because it's been stuck in such a sideways range. If it keeps on going, you're not going to make money in puts. You're not going to make money in calls. But when it breaks out, wait for that breakout. And if it breaks down, let's look at the breakdown. You can buy. You can switch and buy up instead of buying calls, buy puts. But I like it on a longer term basis. And again, like I said, the RSI chart's getting a little oversold. So, but I just, when something stays in that kind of a sideways range for a ride, it's a killer for options players.
Mm-hmm. All right. Okay, let's go here to the next one. MU, I believe that's Micron.
Oh yeah, Micron. Okay. Now we got a lot of stocks. I mean, advanced Micron I like, and you don't like. Look at this one. Okay, and again, getting overbought, a little overbought, which has me concerned. But what I like about this name is that it's getting. See how it's got above its 50-day, but only slightly. This one's more meaningful, so that's a nice breakout. Go back here. Then I'm going to draw a trend line.
I'm going to add this to my long-term portfolio. I feel this.
Long-term, you got to love this stock. And here it is. It's broken above its trend line going back to April. That's a trend channel, really. If you drew a channel there, and let me get rid of that. I'll get rid of all of those things, and I'll get rid of this. And so it's one of those things where I'd be nibbling here on the stock. If it pulls back, then you add to it, and then you really. See, look at this trend channel. It's been in this trend channel for a while, but look, it didn't go back all the way down and retest the bottom line of it. It tested it there, got close to it there, and this time well above it. And now it's making a nice higher high. This is really the first higher high it's seen. This is a good stock. I like this stock especially longer term basis. And okay, now look, again. Here's another thing that we talk a lot about in technical analysis. old resistance becomes new support. Look at this. That was the key resistance level. You know, when it finally broke above it, it took off. Well, that old resistance level has now become new support. It held that level. I love that. It broke above that trend channel that we're talking about. It acted well today in the face of some, a negative drop in Nvidia. And again, it's not crazy overbought. If you want to play this one, I mean, you might want to look, but I want to go right at the in the money here. I'm going to go the $76 or $76 call options that expire Friday. Look and see how it opens tomorrow. I'm going to talk about that one definitely on the chat tomorrow. First thing, even before the market opens, we'll see how it looks. I'm just a little worried. It's not, you'd love to see a stock that's oversold. It was breaking a trend line that's even neutral. But since it's overbought, a little bit overbought, its upside isn't going to be huge. But that doesn't mean we can't make some money on a short term on the options. But if for buying the stock, this is one. This is one where you say, I buy the stock, I put a stop down here in this range here, right here, about $65, and it breaks below that, then we got problems. But this is a stock that I love it fundamentally, and it looks like it's got some nice upside potential on a short-term basis as well. It just doesn't have as much upside as maybe a PayPal, which has had nothing but bad news in the stock lately. But look at this thing. Look at its RSI chart way down here. Remember I talked about that Bollinger Bands chart? I'm going to get rid of the moving averages. And again, the stock that's moving, it's more than 2 standard deviations below its 20-day moving average. Look at that. See that right there? It's below that. And see other times where it dipped below it. It saw a nice rally there, saw a decent rally there, saw a nice pop there. We're really going to a level here. We want to look at those $205 calls that expire either this Friday or next Friday. So $205 calls. Again, I'd talk about that pretty much every day in the chat lately. And we'll see how it goes. But again, its RSI is very oversold, down at 22. It actually got as low as 21 and change. I have seen it lower one time, but that was at the 2018 lows. I'm sorry, March 2020 lows. And of course, everything was ridiculously oversold. There was all sorts of margin calls, everything. So to wait for it to get that oversold, I think you'll be waiting a long time. So this one's one where we have a situation where it's washed out. Volume has been put in here. The volume has been really high. That's what we like to see. Let me get rid of the Bollinger Bands. But see this thing stock right now? Look at that volume. It really picked up and shot to the moon. That means everybody just said, I'm out. Dump the stock. I don't want this thing anymore. So pretty much everybody who wanted to sell, they were saying, I should probably sell here. I should probably sell here. Oh, I wish I had sold. Oh, I'm going to wait for it to back. I'm not going to forget it. I'm out. I'm out. Look at that volume. 63 million shares, which is 6 times its 50-day average. I think it's a 50-day average. It's the 50-day average. 6 times its 50-day average, and way more than anything else this year. That shows the stock is washed out. This is one that people should look at buying calls tomorrow morning, and even short-term calls as early as Friday. But again, let's see where it's going to open. If the stock is going to open at 210, then you want to buy the 210 calls. You don't want to buy the 205 calls. That'd be very expensive. But I think this thing can bounce back nicely by the end of the week.
Okay. What about Freeport?
Oh, Freeport McMoRan, you mean? SCX? Yeah. Okay, here's one that I have suggested this week to buy calls.
It looks like the chatter, they have some good picks. Funny how many of these picks were already in them or already traded them already.
Exactly. Now, this one is, again, the $39 call options. I want to go out a little bit on this one because I think it's got great potential. But look at this. Here's a stock. Okay, let's get rid of these. I'm sorry. Okay, before I get rid of all the lines, I'm just going to get rid of one, and then I'll get rid of the rest of them. But look at this. It's trying to get a golden cross, right? Which it didn't really dip very low below. But let me just go back here a second. I'm going to show you something. Okay. Look at the last time it had a golden cross. Look what the stock did. Hello. So it's getting close to a golden cross. That's bullish. And so that's what we're looking for. Gold is trying to break out. Let me go. Of course, it's also copper and stuff. But let's zoom in a little bit more. Boom. And let's get rid of these moving averages. Bang. Okay. Now, get this out of the way so you can see it a little bit better. Now, the stock is not oversold, but it ain't overbought either. Okay. And look at this. But one of the things I probably should have mentioned right at the beginning, the thing that we really like to look at, it's very simple. Some people try to make technical analysis so much more complicated than it is. And it's a momentum-based strategy. Why try to, all these crazy things? But again, one of the key things of course, is whenever you break a support or resistance level, it always has to be a meaningful break. Like as I mentioned, I showed you earlier, whether it be the 50-day moving average on one stock or 200-day moving average on another stock, it sees a slight fake above a break above or slight break below. Those are not enough. You need a meaningful break, like a 2% break, to really show that it's broken that level. But look at this thing. This level, basically $39. Stop there. Stop there. Stop there. Stop there. That's 4 times in the last 4 or 5 months. When it finally breaks that level, all those sellers have been standing there, just standing there, selling it. I'm not selling it. Oh my God. Either they run out of stock to sell, or oh my God, or been shorting. Oh my God, I got to switch. This is a key resistance level, and it is not overbought. Let's look at the MACD chart really quickly. I'll add that in there real quick. Bang, that study, and that MACD. Now look at this. The MACD, it looks like it's trying to make another positive cross. It's kind of a minor one, and you can see here. That's why, again, it wasn't a major MACD negative cross, so I didn't turn but this just wants to go, and it breaks out. So right now, we have been talking about the $39 calls. I do want to go out because I don't think this is going to be one that will definitely happen this week. So I'm going out to next Friday, the 19th, the $39 calls, and I'm just going to write it down. So again, it's already on there, but I want to make sure calls.
Yeah, it looks prime for a rip,
right,
and with the infrastructure bill on top, piggybacking on it.
Exactly.
Is there a market rotation right now? Matt, do you think, like from tech to growth to value right now?
Okay, let me just answer that question 1 second. But look at the GLD as well. Okay, now Freeport McMoran's copper and things like that, but then also Freeport McMoran Copper and Gold is the old name of the company. It's still maybe its official name, but they're also correlated to gold. So here we go. Get rid of those things again, and here is GLD, which is the gold ETF. And again, same thing. See, it's bumping up right against that resistance. It's going to $180 very quickly. You want to look at those. We've been talking about these ones as well. Some people already own them. Some people bought the SLV calls as well. But we're looking at the 172 calls. Again, I want to go out a couple of weeks. You can even go out to the end of the month. It's just harder the end of this month because it's Thanksgiving, the Friday of Thanksgiving. It gets to be just harder to trade because you have so many days off. So that's what I'm really looking at there through the 19th. But again, going back to your question about the rotation. This could be happening. Obviously, the tech stocks continue to act really well. Today, we saw some weakness. Now, one of the things we didn't talk about when I gave my little presentation, but I do just want to talk about, and I'm going to circle back. Don't worry, Rodrigo. I was going to say, the NDX. Okay, nice breakout, nice higher high, right? But look at this RSI chart. Very overbought. This is we're talking about as of yesterday. It's curled back over today. But look what happened the last 2 times. It got this overbought. Okay, pretty significant pullbacks. So it's too early after one day. This is now the QQQ is the ETF on this. So this is the one you want to be looking at options. We're talking about those, the 395 put options that expire both on Friday the 12th and next Friday the 19th. The things we've been talking about at the end of last week and now this week, especially now that they're rolling over a little bit. Let's see how they act tomorrow. Those are the ones we're going to be looking at. And again, if it gaps lower, we can buy the $390 calls. This is okay. If this thing's again, it can become a very overbought condition. This could play. Now the same thing with the S&P. Whoops. What did I do? I'll go here. The S&P, same thing, right? Nice breakout to the upside, but it's getting extended. These are not crazy 2000 levels where, major bubble, the market's going down 50%, but you see what happened here. I should have gone back to 2020, very similar to the top just before the pandemic hit. And again, these are the kind of levels that the SPY is the ETF for that one. You can look at those. But we've been concentrating on the QQQs because they were been more overbought on an intermediate term basis. And if this is the beginning of a sell-off in tech, I think these gold stocks and some of these value plays are going to do much better.
Right.
Yeah. Believe me, we talk about those almost every day. But and another one, again, to the opposite side, is the IWM. If we're wrong about this stuff and the market continues to hold up and hold in there nicely, and and Tesla and Nvidia all bounce back strongly tomorrow, look at the IWM. The IWM is the Russell 2000 small cap ETF. Okay, and you can see that is badly underperformed for a while. Only it hasn't gone down; it's just gone sideways. But look at this. Talk about a long-term sideways range. Whenever anything breaks out of a multi-month range, it should make you stand up and notice. Well, look at this one. This one goes way back into the spring, and it finally broke out of it. Is this a head? It's a little overbought. Is it a head fake, or is it a real breakout? If this market goes higher, one of the things we're going to be concentrating, or one of the things, plural, should say one of the things. Many of the things we look at is individual stocks in the small cap area, because they got lots of catching up to do, and because they've gone badly, they've lagged badly behind the S&P 500. So we're going to be looking at those names to be, again, we'll want the bigger cap names because they're big cap for small cap names, and there's plenty of them that have very liquid options. Some of them don't have liquid options at all, so we need to avoid those. Again, it was great. The stock went up 10%, but I had to sell the options down 50% to get out of my position. So that's what we're really be looking at. We're looking at those the IWM and the smaller cap names that are in these Russell 2000 that for some year end, if we do get that year end rally, those could be some great potential there.
Okay, let's go, and we can make this one the last ticker here. Ford
Motor. Now, okay. We've been talking about this one now. I have to tell you, it got here, and I didn't like the stock. The earnings were coming out. General Motors had reported earnings, and they were bad. You can see the RSI was getting very overbought. And it was starting to roll over, and I said, okay, nibble on the puts, okay? And I was dead wrong. So you got to admit, and people can't tell you about their bad trades, then you shouldn't be listening to them anyway. I didn't say going all in because I said, I don't know what these earnings are going to be, so only nibble, don't pay. And what we frequently do on late in the week is we do lottery tickets. We call lottery tickets. And the reason we call them lottery tickets is that whenever you buy a lottery ticket, or at least most people, you spend very little money and you know you're going to lose it. You don't really care. It's like, so you don't spend a lot of money on lottery ticket plays because it's like, hey, this stock's going to expire tomorrow, but it's way, way oversold. You might be able to make a lot of money. Hey, you put down $50, you make $500. I mean, and why not go for it? Because it's very high risk, very high reward. You never put the only money you put into it is money it's like, I won't even think twice about losing it. I don't even care. Like buying a lottery ticket, I don't care. Maybe it's for some people, maybe a couple $100. For other people, maybe $20. I don't know, but that's what you can do. This was not one of those, but this was one was getting more nibble. We didn't want to put a lot of money into it because it's just I was guessing at the earnings. It didn't work. The options went down badly, and that one didn't work. However, look at it now. It's more overbought. And let me just pull up here. I'm going to go back to these Bollinger Bands charts. A lot of people are bullish on the stock, so the sentiment is getting a little out of control. And, I think they're doing a good job. They're a good company. They've turned things around in a major way. But again, I'll zoom this in a little bit. It's getting a little extended. See, on his Bollinger Bands chart, it's getting extended as well. I'm going to go to the weekly chart as well. Hold on. Now, look at this weekly chart on Ford Motor. weekly chart. I'm sorry I have so many lines here. I'll get rid of some of them for you. Bang. Okay. Now, this stock is, it's getting it's more overbought than it was here. Again, the stock doesn't look like much of a decline, but there's one again, I'm not saying the company's in big trouble. The stock's going to go down 50% or anything crazy like that. But, shoot. Now this red ball came up again. But you can see that the stock went down about 20%. Now let's do it again. Let's see if I can get it up here. It's actually more than that. Because you think it doesn't look like much, but it's a $14 stock. And it went from, God dang it. But there it goes. Okay. It went from basically $14 down to $11. Okay. So it went down 30% in a couple of weeks. Okay. So here's one that is very overbought. If you go back through time, I'm going to get rid of these Bollinger Bands, but see how extended it is? Here. Okay. Now, again, same thing here. It went down for a while. It got overbought. It got way above its Bollinger Bands. This time, it didn't get very much above its Bollinger Bands. But this stock is getting ripe for a pullback. I really like the $20 puts here. I'm going to go out to next Friday, because we only have a couple days left. But $20 puts that go out to next Friday. And I just one reminder going back before, and we can talk as much about Ford as you want, but just go back on those. Remember, I mentioned the QQQs and these other ones. When a thing gets really extreme and you see a sharp decline, remember those have options expire 3 times a week. They're incredibly liquid. They're very easy to trade. You can buy, people can trade tens of thousands of options at a time without any problem. And so for us, to just trade hundreds of dollars, hundreds of options, or 2 or 3 or 10 or 20, it's easy to trade. They're very tight spreads, just a couple of pennies, 5 cents at the most. And so if you want to make a really short-term play, you don't have to wait till a Thursday to take a lottery ticket. You can do that if a stock really gets clobbered on a Tuesday. You think it's going to pop the next day on an ETF, on an SPY or the QQQ. You can do those. So, but getting back to Ford, again, good company. I think it's going to be the stock could do very, very well. Jim Cramer was pushing it yesterday, as he really likes it. But on a short-term basis, I think this stock has nowhere to go but lower again for the next week or two. After that, we'll see how it looks.
Interesting. Great. Interesting take there, Matt. So just to recap here, what we've done, we've gone over market themes. We've gone over sectors. We've gone over the full market overview. We've talked about stocks and possible option trades that we'll be following up in the chat room with Matt. And it's definitely been a great session. It looks like, the people are definitely enjoying the conversation here, Matt. So what would be some closing remarks here on your end, what you're looking forward to on the upcoming week and weeks for the chat room members, and why they should join?
Well, I think that we've seen over the last couple of weeks this whole effect of gamma has had on the stock market. It's going to continue to do that. And what we're going to try, what I plan to do is spend a lot of time looking at these individual stocks that are seeing a lot of movement in the options market, and try to go with the flow. The trend is your friend. And then when they get to extreme levels, like we've seen in Tesla and Nvidia, try to reverse that trade and make some money going the other direction. The point is, right now, we had a lull over the summer with some of this options trading. It's picked up again. The volumes are off the charts. We want to be able to take advantage of that because long-term investing is great. And we want to have, like I said, a certain bucket, a certain amount of money that's just long-term with a really good, a fund manager and such, or with some good fundamental trades that pay you a nice dividend. That's great. But when you have a situation right now where the Federal Reserve has been providing all sorts of liquidity, it provides all sorts of opportunities for us to make money in both directions. For so long, individual investors have only been able to take advantage of upside. And when the market gets clobbered, they buy on weakness, and lose it all, lose everything that they've made. We want to not only make money on the way, not only want to just weather the storm when it comes, we want to make money on that and profit from that storm. And I think that in the next 7 to 8 weeks into the end of the year, it's going to be incredibly exciting in this marketplace in the options area. I think it's going to continue to early part of next year. To be honest with you, I think the options market has changed for good, and there's going to be opportunities forever. But I really think over the next 3 to 4 months, it's going to be particularly enticing. But it's not going to be a one-way street. A lot of people already forget that how much the market, how much money was made to the downside for people who were nimble enough to play from both sides in September. And that was only a 5% correction. Corrections of 10% or more are going to happen. In fact, I think the odds of it are very, very high in the next 6 to 12 months, and we're going to be able to take advantage of it. So come along for the ride, and we can play. And the last thing I would just say is that we can also trade around long-term positions with options. Those happen a little less frequently because it happens every few weeks. The individual stocks are more the one that we talk about on a short-term 1 to 2 week basis. But there's a lot of different ways to play this market. And you want to be able to use them all to maximize your gains. And I love this market. I hope you can tell that I'm really passionate about it. And it's something that's in my bones, and I love doing it every day. And I love helping people learn more about it. And the biggest thing for me is not just to help you make money, but help you learn about how the market really works, and not just what they say on what you read in the magazines or listen to on TV. Some of these guys are paid to be bullish. I'm paid to help people make money in either direction. I do that for my institutional customers. I do that for you, and that's what I want to keep doing going forward.
Lovely to hear that. Yes, and a lot of truth in everything that you speak there, Matt. Absolutely. And we appreciate, as retail traders, all the work you put in and everything that you do to help us retail traders navigate these markets, the bullish markets, bearish markets, ape markets, choppy markets, whatever it is. You've been successful at it, and that's really great. So definitely, guys, say thank you to Matt Maley in the chat.
Thanks so much. And for those who are in Asia, look for me on CNBC in about 50 minutes, 45 minutes.
Okay, so you'll be on CNBC Asia and
CNBC Asia, yeah, and at 8 o'clock.
I'll tune in. I only tune in to watch you, Matt. That's the only time I watch CNBC.
I don't even know if you can get it here. It's because by then I think they have Shark Tank on or something here in the U.S. But it'll be on in Asia, and I'll be on scheduled to be on Friday as well for Trading Nation. That'll be a shorter clip on Trading Nation. And you know what I'll do is I'll probably the clip I did today. Which was a little bit more general. It was a little bit longer one. I'll put that on in the chat room either tonight or tomorrow. They did send me the clip for it, so I'll put that in there too. The one I did today at 1:30.
Okay, sounds good. I'm going to stay here answering a couple questions about the chat room with Matt. So don't go anywhere. We're going to stay here for a bit. And Matt, appreciate you, man. Always coming in here, helping us with our thoughts.
Thank you, buddy. Thanks a lot, Rodrigo, and we'll talk to you real soon.
All right.
Good luck, everybody.
All right, Matt. Thanks for coming in here. And I just want to show you guys really quick here. This is the chat room with Matt. So as you can see, we're adding a couple of tools here, movers. We're gonna continue adding more tools to help you have a more engageful conversation amongst each other and also with Matt. But ultimately, the value is talking to Matt, right? His experience and all that. You can see here all of the conversations, daily responses. Everybody that has a question gets a response on their trade, on their strategy that they're trying to get feedback. This is what I call a trading partner, right? I mean, Matt is basically going to be your trading partner. And this is not, any random person. We're talking a chief market strategist at Miller Tabak private equity firm. These guys are moving bank, right? So as retail traders, we don't move the markets. We just ride the waves. And somebody with that good insight, like he's spoken to Carl Icahn and a lot of the other, legendary investors that, after doing this for 40 years, like, come on, like that's a full career. So this is the chat room. We're going to keep adding some more things where you can change your username, add your picture, tag people, a lot of features that our coders are working on, and it's not going to stop. We're going to keep adding more tools to this because we want to be able to provide you the best resources out there. Now, any questions about the actual chat room, guys, with Matt, or anything that you want to ask me while we have the stream open here before. And just to clarify here, the deal expires at midnight. This is Matt Maley's Inner Circle chat room. We call it chat room, but it's really more like a trading room. where you have a bunch of tools, you have a community. You're going to be meeting on a weekly basis on a live call with Matt Maley. So that is where you'll be able to talk about, and maybe, well, ask questions about stocks or options, maybe an option trade that you're stuck in. It's not just about making money. It's also about like not losing money. So we definitely are very keen on the responsible trading side. We want to make sure that everybody, they're able to successfully become traders and learn as well, right? Not just get a trade saying buy here, but also understanding the reasons why, right? And keep in mind, trades you're getting from Matt Maley are filtered by Matt Maley, chief market strategist. Those are trades that he's looking at. And keep in mind, equity firms, they invest millions of dollars in research. They invest millions of dollars in being able to have the best data out there. Data that's only available to hedge funds or equity firms that are not available for retail. So obviously, Matt Maley is sharing you all of the good things that he gets from that, right? So it's pretty good. It's pretty good. You're a retail trader, but you're trading with big money. Like, that is a dream come true, if you ask me. So let's hop over here to see what kind of questions we got on the chat. Yeah, great session. Absolutely. I enjoyed the session. This is great. Matt's a very smart dude, and I appreciate all his feedback on stocks and all that stuff. No, this is for yearly. So this is for the year. So this is annual. So basically, it's a one-time payment for the year. You keep the discount. You're grandfathered into that. So even if the price goes back up, the full price of the chat room is like $6,000. Today we're doing the special, which is 70% off. So, but that's until midnight. And you also get a complimentary laptop that's going to be sent to you as a gift, something that we want to give you, just to show our appreciation to you, on joining the community and the family. And you keep it, it's not like you're renting it or leasing it. It's for you. No, there's no recording. Only the members, chat room members, will be getting the recording. Meme forever. I'm posting the link here in the chat. 1 second. Yeah, I mean, if you think this was like awesome, just wait for the weekly calls in the chat room. Those are going to be insane. Like, as you can see, Matt Maley knows a lot. He's talking about 20 different things, because that's how big money thinks. It's not just like 1 + 1 = 2. There's a lot of different factors, and it can get confusing sometimes. But at the end of the day, that's why big money is big money, right? So, got to learn how they think. There is a 7-day money back guarantee. Meme forever. I mean, it just depends. Do you see the? I don't think Ashbarg. You see the chat room. So if you have a question, or if you have a trade that you're doing, or you have a strategy that you're trying out, or you're stuck underwater in a trade, you just pop in the chat, talk to Matt, and boom. And we had to get this chat room approved. I'll tell you, like, we had to get this approved by the board of directors at Miller Tabak Equity Firm. This is not something you can just, randomly push out. So we went through a lot of hoops to get this approved, so that we can give you guys this chat room with Matt Maley. It's not because it's a chat room. It's because it's Matt Maley. It's because of who he is. So yeah, you get 1 phone call a week. And basically in that phone call is where we're going to be talking about like our current trades. We're going to be talking about our upcoming trades. We're going to be adjusting our portfolio depending on the news, because it changes every day. It's like rotations happen and you don't even know it. So staying on top of all those things is what's going to help you become a successful trader, because you want to trade stocks that are going up if you're on the long side, and you want to trade stocks that are going down on the short side, right? You want to trade the weakness and you want to trade the strength, regardless of what the market is doing. Matt Maley's members have been banking for quite some time. I can tell you, it is the subscription that I use to make my own trades. I mean, those are Matt's trades, but like, I actually take those trades. I was in the Viacom put. I'll never forget that day. It's insane. Like, turning $500 into, just times 2,500 or 5,000. So a lot of great trades that have come out, honestly, from Matt Maley, and that's just one of them. But typically his calls are always performing, always. probably the highest P&L, I'd say. So, and the record for the Viacom put 2,500% gain, and that came with a sell alert as well. Yep, I put the link there in the chat, guys, in the Zoom. I think I put it there as well in, let's go to YouTube. All right, let's go over some of these questions, guys. No, Gary, the laptop is included as a compliment. It doesn't change. It wouldn't change the price. But feel free to email, that email we're putting there on the chat, or call that number. That's the only way you guys can get the deal, all right? Just to be clear, and there's no confusion, the only way you can get the deal, right? Well, 3 ways. You can click on the link on the description on the video. You can call the number on the chat, or you can email that email on the chat. Those are the only ways you're going to be able to get the deal. And it expires at midnight. So I dropped the link there. And if you have any questions, always just feel free to put them there. Yes, Charisse, you will be getting option trades. We actually just went through like 7 option trades right now. We went through Ford, Freeport. We went through so many, I forgot. But like we literally went through like 6, 7 possible option trades. However, keep in mind, we just did this off the cuff, right? Going over these tickers with you guys. Now it's where it gets interesting. Now is where basically Matt Maley is doing his research on this to follow up with you guys tomorrow in the chat room and throughout the week on all of these option trades. So these are all possible option trades that we will be following up on, right? So this was just a quick educational session, a quick workshop that we do. But obviously it gets hot and heavy in the chat room because that's where we're actually putting the trades. That's where you're actually getting the direct trade, right, in the chat. And you're going to get all the tools that we're going to be adding there. We're just going to keep delighting you with additional tools, additional resources in the chat room just for you guys. And remember, those sessions on that you're going to have, that conference call with Matt Maley once a week, that is only for active chat room members. Okay, that is only for all these guys that are in the chat room. MT, Arthur, all these other people that are basically in the chat room. You'll be able, DB Future, Beatriz, shout out to Beatriz. She's from Spain. She loves Matt Maley. You have no idea. I wish I could show you all the emails and feedback that I get from people that are in the chat room. It's very, very it's very deep. They love it. They appreciate it because someone is finally taking the time to explain to them concepts that, typically Wall Street wants to overcomplicate. Why? Because at the end of the day, like financial advisors, they want you to give them their money, right? Because they want to confuse you. They don't want you to do it on your own. And they want you to give them their money, basically. They want you to give them money so that they can manage the funds for you. Here, what we're doing is that we're showing you how to do it. We're teaching you how to do it. Okay, we're not charging you 8% a year on all assets like a financial advisor would. And keep in mind, Matt Maley has really, really, really big clients that they manage funds for. So, I mean, we won't be able to disclose anything like that, but yes, Matt Maley does manage a lot of big client portfolios, and you get benefits from Matt Maley's research. You get benefits. You get all of the you get all of the action, all the crumbs, the whole piece of the pie. You get it all because Matt Maley's already there. He's in the game. He's doing it. Like, this is his career. You're just getting, a piece of the pie of what he's doing on a regular basis as a chief market strategist. So, yeah, it's pretty awesome. I really, really think you guys should try it, especially if you're new or if you're, I'm assuming all you guys are retail traders, but if you're new, this is for you. If you're down, don't wait until you're down 80K, 150K, 200K, because I get those calls. And, just if you're going to come into the markets with a big amount of cash, you really need some sort of guidance. And by guidance, I don't mean go to Wall Street Bets. I don't mean go to Reddit. I don't mean to follow these kids on Twitter. I'm talking about getting real guidance, real education from a professional, a verified professional. In 45 minutes, y'all can go ahead and watch him on CNBC Asia. Matt Maley's known around the world for what he does. So you guys are just, you're getting spoiled, all right? You're getting spoiled with Matt. That's the truth. I have to say it. And let's go over a couple questions here on Zoom. So yeah, Ashberg, it's pretty comfortable. We haven't capped the size of the chat room. I know that we will at one point, but it's not today. It's still in a very comfortable place as far as number of users. Okay, P Paxi. So this is a live trading room. Okay, it's a chat that you communicate with, but we have live sessions, right? You're gonna get a link in the chat, inside the chat. It's only for members, and in that link, it's a Zoom conference call that you're gonna have with Matt Maley, Chief Market Strategist. Like I said, going over trades for the coming week, for the prior week, adjusting the portfolio, digesting the news, finding out how certain policies or certain things that are happening in the world can impact your portfolio or your trades, or if you're underwater on a trade, like it happens, but I guarantee you, like, the worst thing you can do is go to Reddit or any of these places, social media places, and ask for advice and use advice there. It's not good. And you want to be successful long term, right? You don't want to be a short term boom and bust kind of guy where you make some money and then you lose it all and more. So education is the most important thing in life. If you don't have it, you're just an emotional trader, unfortunately. And as a retail trader myself, I can tell you, we can't be falling back to emotions, right? If a trade's not working out, you need to have a plan, you need to have a strategy. And then, you have the conversation about the quality of your plan, right? Because if my plan is to buy it because the stock is so low, that's a pretty bad plan. It's not very well thought. So it's also about the quality of the trades, if that makes sense. So all of the trades that you get from Matt are vetted, researched, and analyzed by him, the chief market strategist at Miller Tapeback. So that's a pretty high quality trade, if you ask me. Yeah, so forever, send me an email, okay? I don't know if that is mark something separate, but just send me an email, all right? Okay, so let's go to the questions here on the Zoom. Okay, so Morgan, I hope you're doing good, Morgan. So yes, Matt Maley is in the chat room every single day. He's there Monday to Friday. Maybe you can catch him there on a weekend. I don't know. But basically, yes, he's there in the chat room all day. And then the live session that you guys are going to have, that's just for chat members. This is not that session. Okay. This is just a little educational workshop that we, whip out for you guys. That's it, to help you guys navigate the markets. And a lot of his members are actually watching because they, nobody can get enough of Matt Maley. I can tell you for sure, especially. And when the markets are down, that's when everybody's like, Matt, what do I do? What do I do? Like, I mean, I've seen it so many times because he called both corrections like at the top, literally. So, obviously, when everybody's doing fine and making money, it's like, yeah, I love you, Matt, all that stuff. But you can see how the members, how they trade around Matt's strategy, which works. And get in the chat room. You can go look at all the prior chats. You can go see what other people are saying. See it for yourself. Like, I don't have to tell you. People are banking their well off there. So, yeah, I think that's a pretty cool community to be part of, right? You want to trade with a community that makes money, right? So, I mean, there you go. Trade with the smart money. Trade with the big money. Don't trade against it. Okay. Do whatever, but don't trade against it. Don't trade against big money. Learn how to trade like they do, right? You need to learn how to think like they do. That's just the reality of it. Big money moves markets. You want to trade against it? I don't think so, right? So yeah, Morgan, basically the call would be a private call. It's a conference call just for the chat members, and it's once a week. And we're basically going over trades there. We're going over a lot of things there. I'm just trying to like give you the overview, but there's obviously a lot of things that he goes over, including options. Like, very good with calls and puts. You're welcome. You're welcome. Does he suggest his best puts and calls for the week? Absolutely. He's the best of the best. That's all you get with Matt Maley. 40 years in the game. 14 years. I think it's 14 years at Miller Tapeback. I think it's like 10 around there at Merrill Lynch, and 14 at Solomon Brothers. A lot of you guys maybe are too young to know who Solomon Brothers are, but in the 80s, 90s, that was like the hottest. the hottest firm on Wall Street, kind of like the Kathy Woods, of that time. And a lot of giants, a lot of legendary investors came out of there, including Matt. So yeah, I mean, if you're new, I don't expect you to know this, but now that you know, that should give you some confidence really in knowing, what you're doing here with us. We only bring you the best of the best, and Matt only brings you the best of the best trades. I know that from experience. Okay, I trade too. All right. Um, there is a 7-day money back guarantee period, so there's no confusion. 7 days. All right, Ash, and that says options. All right, and it's 7 days. Davin, ETA of the laptop. So if you sign up today, hopefully you do, so that you don't have to pay double when the discount expires. We would be shipping out the laptop to you on day 7. That is after the money back guarantee period. So after day 7, let's say you join today, 1 week from today, we'll be sending that out to you so that you can keep that laptop. All right. You can do whatever you want with it. You can mine Bitcoin. You can have a trading journal, whatever you want with it. Give it to your kids. No chip shortage. I don't know. We've definitely had some issues with the laptops from the wholesaler because of the chip shortage, maybe. I don't know. If you do not know how to do options, but are only doing stock trading, it will Matt Maley. Yeah. So I mean, we talk about options, but we talk about stocks too. I mean, options are derivatives of stocks. So you find a good stock, it looks good. The next question is, do I buy calls or not, or do I buy puts? So we look at the stock and then we determine what we want to do. But a lot of people trade stocks, a lot of people trade options. It's just that, remember, we also hedge with options. Sometimes you might not be going long. You're really just buying a put so you can hedge on your long-term holding, like we just did on FCX, on Freeport. So, and Ford, you can do it too, right? If you own the stock and you're up a lot and you don't want to sell it, you can hedge. There's so many different ways, guys, that we use basic calls and puts. We're not talking about nothing crazy here. We're not talking about spreads. We're not talking about diagonals or calendar, this and that, iron condors, butterflies, chicken wings. We're not talking about none of that crazy stuff. Okay. We're doing basic calls and puts. Anybody can do this. It's very simple. You don't have to be, a mega advanced options trader. And I think as a stock trader in general, like a lot of stock traders that just trade stock, they also trade options for hedging. Does that make sense? So we use them for different purposes at different times. And eventually, obviously, the goal is to make money, right? Regardless if the stock is going up or down. So it's very fun. I really think you guys, if you're starting options, this is definitely, the place for you, because it's just going to be, it's going to be basic. It's going to be basic. You're not going to be overwhelmed or anything like that. You're going to have guidance from Matt. And you have the sessions every week. Like, come on. Do you know how much it would cost you to talk to like a financial analyst about your portfolio? It's like 20 grand. All right. To talk to like somebody in a private equity firm for 30 minutes. All right. You're getting that every week with Matt. And Matt's not a financial analyst. He's above all of them. He's like the head honcho at the equity firm, the chief market strategist. So you guys are getting this for a steal, to be honest. This is, I mean, it's so much that if you are very new to trading, you might not even know the value of it. But if you're a veteran, seasoned trader or investor, and you already know you listen to the presentation, you know where Matt's coming from and his experience and background and what you're getting and what you're paying today, to be honest. Yeah, definitely a steal for you guys. So yeah, and that's why it's expiring at midnight as well. No, you can be on the chat every single day, LC. DJ Pre, training on what? Training on what specifically? Let me know. LCs, you get to be on the chat all day. So you're going to get a watch list with trade ideas, not just during the call, but on Monday we have like a huddle, where Matt is going over certain trades, like what he's expecting for the week. Remember, we go week by week, guys. All right. There's a lot of changes in the market day to day. So we have an approach where, okay, let's just say we're starting this Monday, right? So, Monday, you're going to get information from Matt. Yeah, he gives picks every day forever. You're going to get information from Matt on Monday. And that's how we are going to be approaching the market for that week based on what happened on the prior week. Okay. So we get ready for the coming week. And then on Friday, we meet, right? It could be Friday. The day, it's up to Matt, but it's going to be always for you guys. We're going to have a set time. And basically, you're going to have that private Zoom call with Matt on Friday. And you're going to talk about, the stocks, well, what happened during the week, right? Because a lot of things change and you need to be up to date with what's happening in the markets. So, it's like you get everything. You get your breakdown of the news of the sectors, how to trade it, how to not trade it, how to adjust your portfolio, questions on your strategies, questions on your trades. It really is whatever you want it to be. Matt Maley is more than willing, happy, and passionate about talking to you guys and being able to be a part of all these great things we're doing at Benzinga for you guys. Yes, forever picks every day. Training on options basic. DJ Pre, if you want to sign up and you need that, let me know. You can send an email to the email that we put there. If you do need that, if you need the education, something like that, just send me an email after you sign up there. Okay. Forever, it's 24/7. Obviously, Matt is a very busy man. Pretty obvious, but he finds time always to be with you guys. That's why he's there all day. Now, all day, I don't mean, 1 a.m. or 12 p.m. Within the trading hours, within that time, Matt is available. Okay. All right, let's go. Let's plow through these questions. I'm going to post the link there because a lot of you guys are asking about it. Hold up. I need a minute here, guys. Okay. Wow, there's a lot of questions, guys. Let me open this window. Atla, when you sign up, you're gonna get an email, but you can also email me as well. There on the top, on the chat. I put the email. Elsie, give me a call or email me, or just sign up and send me an email after. That way, you don't lose the discount that expires in like a couple hours at midnight. All right, I need to plow through these questions, guys, in the Zoom. So I need a minute here. All right. So, how long is the weekly chat? It's the subscription is for a year. Meme forever. Okay. Is there a specific time for the chat room? No. I mean, there are people from all over the world who are in the chat room and they're talking, like amongst themselves about about Matt's trade ideas and just picks and what we're looking at in the market. And then, Matt comes in the morning and he's like, hey, what's up, guys? This is what's happening. This is how we're adjusting the portfolio. Remember this trade? Let's close it out, 200% gain, whatnot. Like you basically are trading right next to Matt. What time are these live sessions? So the sessions are going to all those times, all the details are going to be in the chat room, guys. All right. Once you join in the chat room, there's going to be all the details on the weekly call with Matt. I believe, and I don't know, but I think it might be Friday. I don't know. It's possible it's Friday. I think so. But once you join, just let us know, and we'll get you the exact time there. Yeah, Matt is there in the chat room. That's where he is. You see him chatting there. You see him in the chat room when you see right there, Matt Maley. Agree, this pullback is nothing compared to the gains from last week. Therefore, we're going to have them break down below this morning's low if it's going to turn into a rout. In other for the effects of gamma to work in the other direction, we're going to have to see these key stocks break their morning lows. So, I mean, this is ongoing trading. This is ongoing mentorship, ongoing education on everything: stocks, options, markets, bonds, yields, oil, interest rates, Fed, tapering. Like, what more do you want? Like, you need to understand the markets. You can't be blind to it. You can't just think you're gonna, wing your way through guessing. It's very important to know what's happening in the market. Now, doing the research is a little bit harder. I understand. Not everybody has that background. But that's why Matt Maley's there. All right. That's why Matt Maley's there. He's explaining everything to you in a very simple fashion so that you can understand, trade around it, profit from it, and learn. Right. There's nothing wrong with learning. There's nothing wrong. It only helps you make more money. I'm saying so. You're getting that high level education. Okay, you're getting high level education, real life trading education, options, trading, all that stuff. So yeah, so the conference call is going to be on Friday, I believe. Okay. Morgan, you're welcome. Join us next time. All right. Join us in the chat room. The laptop is sent to you as a courtesy. All right, Summer, I'll explain the deal again. No worries if you just jumped in. And for everybody else that just jumped in, we just did an insanely awesome session with Matt Maylie, Chief Market Strategist at Miller Tabak, private equity firm. He had to leave right now because he has an interview with CNBC Asia, I think in like 40 minutes. I'll try to tune in to see what he says. That's literally the only time I watch CNBC, when somebody I know is like, there. So yeah, you pretty much get for today only, for tonight until midnight. The deal is that you get the chat room with Matt. You get all of the tools that we're going to be adding to the chat room, like movers tools and widgets and things that we are creating. Keep in mind, this is all Benzinga proprietary technology. We're not giving you some cheap Discord chat or anything like that. We are building the technology here inside Benzinga because we want to give you a lot of tools, a lot of widgets, a lot of things that are going to help you. But the only way for that to happen is if we make it happen with our technology. It doesn't exist. What we are trying to give you doesn't exist. So what do? We build it. That's what we do at Benzinga. We're giving you a glimpse into what's going to be, something really, really great. The chat rooms they're just getting started because we're adding more and more and more tools. We have a lot of developers working on the back end for it, and we are releasing them like as they come out. So within this month and the next month, you're going to see a lot of upgrades, a lot of cool things that we're adding for you, and that's all included. So you're going to get the chat room, you're going to get the laptop, you're going to get the weekly sessions, the weekly live calls with Matt Maylie, Chief Market Strategist at private equity firm Miller Tabak. And on top of that, you have him all day in the chat room where you're getting his trades, you're getting feedback on your trades, feedback on your strategies, trading the news, how to trade it, right? Trading calls and puts on stocks, right? Not just for hedging, but also, on the long side or the short side. These are not random tickers you're getting. This is researched trades by a chief market strategist at an equity firm. Okay. Very, very different. So if you're used to, trading low quality setups, which a lot of retail unfortunately is, chasing penny stocks and that kind of stuff. This is definitely you're going to love this. You're going to love this. It's great. You will. I know. D22 struggling to make the payment, but still unsuccessful. I don't think there's maybe a problem with the card. Can you try again and let me know if you still have that issue? If you have that issue, let me know. You can send me an email and I'll send you a different link. Well, I'll send you the same link, but I'll check it because it seems like it's working. I just clicked on the link, guys. It seems to be working. I don't. There's no issue here on my end that I'm seeing. Let me pull this up for you guys. Okay, so you see that, right? You're looking, this is the checkout, so it's working. I can see it there. You have 6 hours, okay? 6 hours from now to get the deal. This is the timer, okay? If you see a laptop there, you're getting a laptop. If you don't see a laptop, that means we're out of laptops. You're out of luck, no laptop. So if you see it there, you're getting one, all right? Yeah, we can send the laptops to anywhere. Don't worry. We'll figure it out. Don't worry. We've sent it to many different places. So yeah, just, make sure that you get the actual laptop because, if it's after midnight, you won't get the laptop. I don't think so, unless it's still there in the checkout. But, I just wouldn't be risking it at this point if you want to trade with Matt. So this is the checkout. If you see the laptop, that means you're getting the laptop. There's a timer at the top there. It's pretty basic. You put your email, credit card information, sign up. And the discount applied, you can see there, the full price is $6,145 for the year. So that is the standard price that we have. And the discount today it's over 70% off. So it comes out to $12.97 for the year. For the year, with the laptop, with the chat room, with all of the widgets and tools that we are adding inside the chat room. Okay. A movers tool. We're going to add a lot more things. I can't tell you right now because there's a lot of things that are in the works that we're doing. But you're going to have on top of the chat room, which is really honestly all I would care about as a trader, the communication with Matt. But you're going to get a bunch of tools so that you can come up with trade ideas, possible trade ideas, bring them to Matt. And that way you're going to have a more fruitful conversation when it comes to trading in and out of stocks for a profit, right? Yes, the renewal is going to be at the same price, David. Great question, man. Great question. No, this is not Bagu. This is not. So yeah, David, if you join today, you will keep that 70% off for life. So even if the price goes back up to 6,000, you'll still renew at the $12.97. Shout out to Kim, Joe, Tara, Tyson for joining the chat room. Welcome to the family, guys. Welcome. I love to see the family grow. The bigger, the better. The more, the merrier. The more eyeballs, the better, quite honestly. I mean, I'm not saying it just for saying it, but that's just like the truth. You know, the more of us we are, the better we can trade as a community, because that way everybody comes up, maybe, you know, like, hey, I have a question about this stock. And then someone else is like, I have a question about that other stock. And basically Matt is giving you the feedback on that trade. Like, how much would you really like, you know, pay for having a chief market strategist answer you every damn question you have during the day about stocks? Like, we have to come down to earth, guys. Let's come down to earth for a minute. Okay. PKI, send me an email. Okay. Hey, Ashbark, thanks for joining, brother. Appreciate you, man. I'll see you there in the chat. All right. Make sure you go there in the morning. We start trading early here. Okay. We're not playing around. We want you to make money. So we have to be serious about it. It's PSI. That's the 70% off that is what you will renew at. So if I'm telling it to you here in video and recording, so you can hold me accountable for that. All right. It does renew at the 70% off. And yeah, we still have time available. We still have 6 hours, so you guys can still join. 100% money back guarantee, 13 days. I'm sorry, 7 days. 1 second. Yeah, so it is 7 days. It is a 7-day money back guarantee, guys. No confusion there. So yeah, PKS, you're going to keep that price, all right? Don't worry. And all right, what other questions you guys have about the chat room? Let me know, or anything about Matt, really, about his strategy or what he's doing, or if you could join, or any questions you have, let me know before we close the stream here. I want to make sure I can like get all y'all's questions here, just to make it easier for you guys. Okay, let's go to the YouTube side. Atla. We're going to request that information after the sign up. So you sign up and then we're going to send you that. We're going to request for that afterwards. A side question. Okay. Yeah, I mean, Dupree, Matt's been doing this for 40 years. I really don't think he'd be a chief market strategist or a trading director at Merrill Lynch with a sloppy P&L. I'll tell you that. Merrill Lynch had one of the best traders. It's one of the biggest in the world, actually. Yep. And also, feel free to go when you join. Go ahead and ask the chat room members. Hear it from them. Let them tell you how much have they made with Matt's picks. Oh, you're gonna have fun with that. Okay, guys. So I stayed here for some time, answered some questions. We talked with Matt Maley today. It was a great session. We talked about the markets. We talked about stocks. We talked about option trades. We gave like 6, 7 option trades, and we're going to be following up with each and every one of those trades in the chat room and on the weekly live sessions that you guys are going to have and on the live trading chat room. So it's fun. It's engaging. You know, like learning is typically a boring process, but when you're making money and learning, it's definitely fun. It's definitely fun. So, all right, guys, do you have? Okay. All right, guys. So I'm going to drop the link here in the chat one last time. I'm going to be signing out here. If you have questions, you can email or call me. I'm going to put the number there on the chat one last time, and then I'm going to be signing off, guys. It was definitely good. It was fun. I appreciate all your time here. I had a great time. I always learn when I do these things. I hope you guys are learning as well. That's what it's all about. It's the whole goal of this. So yeah, guys, thank you for your time today. We'll be closing the stream. Yeah, send me an email, guys. If anybody has any other questions, if you still have questions, if this is still not, you know, if this is still not clear enough for you, right? If you still need more explanations or have additional questions, email or call me, preferably tomorrow, or you can do it today and just leave a voicemail or send me an email. That's fine. I'll get back to you tomorrow. That way you don't miss the deal, but it is going to be available until midnight. So thanks for joining, guys. I appreciate your time. Thank you so much for being here, being part of the community, being part of the Benzinga community, the biggest cohort of educated retail traders in the world, right? Be part of this community. Join us. Trade with a verified community that we know what we're doing. We're trading with a plan. We're not guessing. We have a full analysis on stocks. We do option trades with Matt. You get full guidance, weekly live sessions, everything. You're getting everything, guys. And keep in mind, everybody in our chat room is a verified active member, okay? Verified active member. This is not like a pump and dump chat. This is not like one of these Reddit boards where anybody can go in and create a fake account. These are all verified real traders. They're from different parts of the world, but that just makes it more interesting because everybody has a different background and upbringing, and it brings something unique to the table when it comes to trading, always. So it's fun, guys. I encourage you to try it, at least for the 7-day money back guarantee that we have. There's a lot that we're going to be going over tomorrow and on the call on Friday. Forever, I don't know. You're going to have to email me, okay? And I guess we'll leave it there for tonight, guys. It was definitely fun. Appreciate your time. And we'll see you at the next time, guys.